Yes, a very good morning to all of you. Right, so all good? Yes, bank audit all good, all done. Right, how many answers you wrote yesterday? You wrote regarding bank audit. Okay, what about the others? Did you at least read? Right, whatever questions are there regarding bank audit, cooperative societies audit? Yes, items of financial statement. Did you remember? Oh, yeah, there are 17 items and 11 items in the balance sheet and 6 items in the profit and loss account. And each item I need to see what is the theory for that item, what are the assertion wise audit procedures for the items, and also what are the schedule 3 disclosures. And then there is one thing that I need to study the content which is there in the chapter, that is the theory. And I also need to see the different varieties of questions which are there in the question bank. Right? Yes, is it right for everyone? Okay. And then we also looked into the cooperative societies, right? So cooperative societies wherein we studied cooperative society or multi-state cooperative society. Then we studied for cooperative society the features and the audit features for the cooperative society. And in the audit feature, so much of variety regarding the audit report only. We said special report to the registrar, then submission of the audit report to the registrar, then the schedules to the report. Then also we talk about the audit memos, which are nothing but the questionnaire, right? The general questionnaire and the specific questionnaire for particular types of societies. And then we also talked about the narrative audit report, right? The narrative audit report, one which gives the serious observations, and part two which gives the, what you say, the observations which are routine in nature, like missing vouchers or something like that. Okay, right? So that was our discussion regarding the cooperative society. And then after that, we started with our discussion regarding the audit risk, right? The basic concepts in auditing, wherein what did we say? That auditor, if you have to obtain reasonable assurance that financial statements are free from material misstatement, you have no option but to reduce audit risk to an acceptably low level. Do you understand? Audit risk is not low. It is to be reduced to low. It is to be reduced to an acceptably low level. And in order to reduce it to an acceptably low level, auditor, you need to obtain the sufficient appropriate audit evidence. So obviously, more the evidence, more the assurance. The more the assurance I want, the more the evidence I should obtain. And obviously, the more the evidence I obtain, the lower would be the risk of my opinion going wrong. The more I can lower the risk. What is audit risk? The risk that my opinion goes wrong. Right? What did we say? In case of Satyam, auditor said true and fair. What was the reality? 7,000 crore fraud. So did the opinion of the auditor go wrong? Yes. What is the definition of audit risk? Audit risk is the risk that the auditor expresses an inappropriate audit opinion when the financial statements are materially misstated. And this audit risk is the function of the risk of material misstatement and detection risk. Risk of material misstatement we assess, and detection risk we manage, right? Risk of material misstatement, risk that the financial statements may be materially misstated prior to audit, possibility of fraud or error. I'm not saying purchases are wrong. I'm saying I think there might be something wrong in the purchases of the company. Risk of material misstatement. And this risk of material misstatement could be at the financial statement level or at the assertion level. Financial statement level overall, pervasive, which can affect any or many parts of the financial statement. And assertion level, that means it relates to particular account balance, classes of transaction, or the presentation and the disclosure. And assertion level risk, further, it could be an inherent risk or a control risk. What is an inherent risk? Possibility of a misstatement in an account balance, classes of transaction, presentation, disclosure, which could be material either individually or when aggregated with the other misstatement before consideration of controls. And a possibility of a misstatement before consideration of the control, that is inherent risk. And what is control risk? Again, possibility of a misstatement in an account balance, classes of transaction, presentation, disclosure, which could be material either individually or when aggregated with the other misstatement, which will not be PDC. What is PDC? Prevented or detected and corrected on a timely basis by the entity's internal control. So simple language, control risk is nothing but the deficiencies in the internal control. The more the weaknesses, the more the deficiencies in internal control, the more would be the control risk. Will there always be control risk? Yes, because there are inherent limitations of internal control, right? We have the inherent limitations of the internal control. And once auditor you assess the RMM, now you need to manage the detection risk. That is, you need to reduce it to an acceptably low level. And what is detection risk? The procedures performed by the auditor to detect a misstatement may not detect a misstatement that exists. Like yesterday in the rent agreement, was there a misstatement over there? In the rent agreement, was it in the name of Geo? No, it was in the name of Mio. So did auditor detect the misstatement? No. So that is detection risk. The procedures performed by the auditor to detect a misstatement may not detect a misstatement that exists. That is the detection risk. Right? So everybody, do you understand the story of audit risk? What is audit risk? It is the function of the risk of material misstatement and detection risk. RMM we assess, detection risk we manage. To assess RMM, the procedures performed by the auditor are the risk assessment procedures, and to manage detection risk, the procedures performed by the auditor are the further audit procedures, and these two put together are nothing but the audit procedures to obtain the audit evidence. Are you understanding that? Right. So then in SA 500, what is SA 500? What is the title of SA 500? Audit evidence. What discussion do we have in SA 500? The audit procedures to obtain the audit evidence, right? What are the audit procedures? So what did we say? What are the audit procedures? Risk assessment procedures, further audit procedures. In further audit procedures, we have the TOC and the substantive procedures. Why do you perform risk assessment procedures? To identify, assess the RMM. Why do you perform further audit procedures? To manage the detection risk. And TOC means what? You're checking the design, implementation and the maintenance of controls in the organization. Whether a control has been designed, whether it has been implemented, and whether it has been implemented for the entire period for which the financial statements have been prepared. It's like, have you prepared the timetable? Yes, then there is design. Have you started studying as per the timetable? Yes, then there is implementation. Did you follow the timetable for the entire period for which you prepared it? Generally, no. But if you follow, then there is the maintenance. Right? Design, implementation, and the maintenance. Does the company have a purchase policy? Yes, then there is design. Whether that policy has been implemented, then there is implementation. And if, say, during the year the company made 2,000 purchases, whether for all the 2,000 purchases the policy was followed, then we say that there is the maintenance. Right? So design, implementation, and the maintenance of the internal control. That means, in other words, we are also checking the operating effectiveness of the controls in the organization. And why do we do the TOC? Because the results of TOC help us to determine the nature, timing, and extent of the substantive procedures. What does that mean? If controls are effective, less substantive. If controls are ineffective, auditor will perform more substantive audit procedures. Are you understanding that? Results of TOC help the auditor to determine the nature, timing, and extent of the substantive procedures. And what are the substantive procedure? Test of details, vouching, verification. Right? Then substantive analytical procedures. What is substantive analytical procedures? Ratios and trends. Right? Then agreeing the financial statements to the underlying records and also examining the material journal entry. Right? So agreeing the financial statements to the underlying record. Like, you know, in company law also we have 143(3)(d). What is 143(3)(d)? Where the balance sheet and profit and loss account, are they in agreement with the books of account? Should not happen that books of account different and balance sheet P&L different. Right? Balance sheet P&L should be prepared on the basis of the books of account. So whether agreeing the financial statements to the underlying records and examining material journal entry. Why? Because it could be a fictitious journal entry, it could be a bogus journal entry which could have been recorded in the books of account, and a bogus valuation of inventory, bogus revaluation of asset, bogus provisions being recorded. It could be fictitious, it could be fraud. That is why we need to examine the material journal entries. Okay, right? So does everybody understand what are the audit procedures to be performed in an audit? What are the audit procedures? Risk assessment procedures. After that, further audit procedures. In further you do the TOC, and then after that you do the substantive procedures. Are you understanding the journey of audit? What a CA does in an audit, what procedures the auditor perform? Yes. Now, to perform these audit procedures, are you all listening to me? To perform these audit procedures, we have these 7 methods of obtaining the audit evidence. Right? For performing the, you say, okay, ma'am, I have to perform these procedures, but tell me, no, okay, how do I perform? Give me some tools. Like to color a rainbow, you require the 7 colors. Similarly, over here, to perform the procedures, you have the 7 methods of obtaining the audit evidence. And what are those 7 methods of obtaining the audit evidence? ICAIORR. Right? What do you mean by ICAIORR? Inspection. Right? Inspection. Then confirmation, right? Inspection. Then after that you have the confirmation, then the analytical procedures, right? Analytical procedures. Then after that you have the inquiry, then the observation, right? The observation. Then after that R is the recalculation, and then last or R over there is the reperformance, right? 7 methods of obtaining the audit evidence, right? So inspection, like, when I see the minutes of the meeting, when I inspect the minutes of the meeting, when I read the memorandum of association, articles of association of the company, when I check any voucher, when I check any supporting documents, when I check any asset of the company, what am I doing? I'm doing inspection. When I get a direct confirmation from the third party, what am I doing? I'm performing the, which method I'm using? External confirmations. We have the SA 505. Analytical procedures, when I calculate the ratios, when I check for the trends, that means I'm performing the analytical procedures as per SA 520. Right? When I make inquiries, whose inquiry I can make? Financial people or the non-financial people, people within the organization, or it could be people who are outside the organization, like say lawyers of the entity or so. Right? It could be a written inquiry or it could be an oral inquiry. It could be a formal inquiry or it could be an informal inquiry. Right? Inquiry in simple language, what am I doing? I am doing a discussion. Right? It is extensively used throughout the audit. Right? So that's inquiry, when I have a discussion with the management or discussion with the employees or discussion with the outsiders. Right? It could be formal, it could be informal, it could be written, or it could be oral. Generally through inquiry, I try to corroborate the evidence which I've obtained through the other sources. What does it mean to corroborate? To cross check. You understand? I read the purchase policy of the company, and purchase policy I read, and what I came to know, okay, all purchases are to be authorized by Mr. A. So this I came to know by reading purchase policy. I also asked the purchase manager that who authorizes the purchases. He also told me A. So what? I'm able to cross check, I'm able to corroborate. I already had one evidence, now I got one more evidence. So additional evidence to an evidence, further evidence. That is what you mean by corroborative evidence. Right? What is observation? Taking a look at a process or a procedure being performed by others. Then what is next? Recalculation, that is checking the mathematical accuracy of the books of account. Right? Mathematical, like depreciation, rent, interest, royalty, mathematical accuracy. And reperformance, performing a procedure again which was already performed by the entity. So like say client already counted the cars, but few cars I counted again on a sample basis. Yesterday we saw for inventory, test count. Right? So on a sample basis, you counted few of the cars again, right? So that's the reperformance, right? So these are the 7 methods of obtaining the audit evidence. What are the tools with the auditor? What are the 7 colors with the auditor? Inspection, confirmation, analytical procedures, inquiry, observation, recalculation, and the reperformance. Okay, right. Now what am I talking about over here is the risk assessment procedures. Now in the risk assessment procedures, out of ICAIORR, ORR. What I use? Inspection. Then analytical procedures, inquiry and observation. Obviously at risk assessment stage, I don't do any confirmation or any recalculation or reperformance because I'm only doing the risk assessment. So inspection, inquiry, and is inspection, analytical, inquiry, and the observation. Where is this discussed? This is discussed in SA 315. Right? These are the risk assessment procedures: observation and inspection, analytical procedures, and the inquiries of management and others within the entity. In test of control, out of ICAIORR, now I make use of the inspection, the inquiry, observation, and the reperformance. Right? So inspection, inquiry, observation, and the reperformance. Obviously, while doing control testing, I'm not going to do confirmation, I'm not going to perform analytical, I'm not going to do the recalculation. So inspection, inquiry, observation, and the reperformance. And for substantive procedures, I use all the 7 colors: ICAIORR. Right? So are you able to understand that these are the procedures? And then you say, madam, how to perform those procedures? For risk assessment, do inspection, inquiry, and inquiry, analytical, and observation. For control testing, do inspection, inquiry, observation, and the reperformance. And for substantive, you can do any of these. Is everybody able to correlate audit procedures with audit techniques? ICAIORR is nothing but your audit techniques, and audit procedures are what? Risk assessment procedures, TOC, and the substantive procedures. Cool? Everybody, do you understand that? Okay. Right. Now another question over there. Okay, why is there a need to perform TOC? Auditor, you know that purchases there is a risk. Like in my example, auditor knows that purchases there is a risk. Why we cannot directly go for performing substantive procedures? Why we first need to do the control testing? Because that is what is told in the audit procedure. No, okay, do risk assessment, then do the control testing, and then perform the substantive procedure. So the question over here is, okay, why is there a need to perform the TOC? Why is there a need to perform the TOC? What is the need to perform the TOC? One, it says auditor's assessment of RMM. When I assess the RMM, it includes an expectation that controls are operating effectively. Based on that, I have assessed the control risk. If I say control risk is 30%, that means what I'm saying, that 70% the controls are working properly. Only 30% they may not be working properly. But have I already checked it? No, I'm only doing an assessment. I only did a risk assessment. So I'm having an expectation that 70% controls are operating effectively. Now I need to check whether my expectation is right or wrong. For that, I need to do the TOC. So why? What is the one need to do the TOC? That auditor's assessment of RMM includes an expectation that controls are operating effectively. And second, you say that substantive procedures alone cannot provide the auditor with the sufficient appropriate audit evidence. That is why, again, what? You first need to do the control testing. Like, you know, if I want to check the revenue recognition of Airtel, Airtel, they have postpaid and prepaid. Now, postpaid, prepaid, entirely system generated nowadays. The bill, and whenever you talk on your phone for 4 minutes or 40 minutes, is there any uncle sitting over there or auntie sitting over there to do the calculation and revenue recognition for Airtel? No, it is automated. Do you understand? Is it automated over there? Automatically is that much money removed, what do you say, reduced, that much balance is reduced from your prepaid balance, or for your postpaid bill, that much amount is charged over there. So if I want to check revenue recognition of Airtel, does it make any sense just by doing substantive procedures, or I have no option but to check the control? I have no option but to check the control. Why? Because it is automated. So that is why, what does it say? Substantive procedures alone cannot provide the evidence. Right. So what question am I talking to you about? Okay, why is there a need to perform the TOC after risk assessment and before substantive? Why are you doing control testing in between? So there are two reasons. What are the two reasons? Auditor's assessment of the RMM includes an expectation that controls are operating effectively, and second, you say substantive procedures alone cannot provide the sufficient appropriate evidence to the auditor. Right? Substantive alone cannot provide the sufficient appropriate audit evidence to the auditor. Are you able to follow this? Okay. Right. Risk assessment as such we discuss in SE 315. Right? So when we do our chapter of the risk assessment, risk based audit and the internal control, that time we will discuss it. Right now we are talking about the TOC and the substantive procedures, right? So now we are talking about the TOC and substantive. So here they are talking about the audit risk. So finally, what is audit risk? One, RMM is equal to inherent into control. And what is audit risk? Inherent risk into control risk into detection risk, right? So can we say there is an inverse relationship between inherent risk, control risk, and the detection risk? Right, a combined assessment of inherent and control and detection risk. Can I say there is an inverse relationship? Array, is there a, can I say there is an inverse relationship between RMM and detection risk? Yes. If RMM is high, detection has to be kept low. If RMM is low, detection risk can be accepted at a higher level. Right, so there is an inverse relationship between the two. Okay, right, there is an inverse relationship. Right, so detection risk. Then after that, SA 320, I'll come to it shortly. Right now I talk to you about the SA 500. In 500, right now, what am I discussing with you? I'll come to the other parts also. But right now I discussed with you the means of collection, methods of obtaining audit evidence. What are those? Inspection, confirmation, analytical procedures, inquiry, then the observation, recalculation, and the reperformance. In the exam, we've seen a retail question on inspection. Right? In the exam, we have seen a retail question. You understand retail question, everybody? Right, on inspection. So it involves examination of records or document or the asset, right? Inspection provides evidence with varying degrees of the reliability. Inspection could also be used for the TOC. Inspection could be used for checking the existence of an asset. Inspection of tangible assets may provide the reliable evidence about their existence, but not about the rights and obligation. So I see the building, I inspect the building, I come to know that building exists, but do I come to know whose name is the building is? No, for that I need to check the title deed, the conveyance deed. We discussed that yesterday. Right? So when you do an inspection of a tangible asset, you come to know the existence of the asset. But just by doing the inspection of the asset, do I come to know about the rights and obligation of the asset? No, for that I need to check the title deed, the conveyance deed, the ownership documents for the same. Right? So see, the content can be understood, but only we know, need to know, this is the content I need to write in my answer. Did I use inspection for doing TOC also? In the list which I prepared over here, did I write inspection for TOC also? Yeah, see, inspection, inquiry, observation, and reperformance. So can inspection be used for performing TOC also? Yes, you can inspect any documents or so. Right, so that's inspection. Right, then for external confirmation and analytical, we have the separate standard. Right, then again, a favorite question of ICAI for retail question is the inquiry. Right, what does it say? Inquiry you could do of the knowledgeable person who could be financial or non-financial within or outside the entity. It is extensively used. It could be a formal written inquiry or an informal oral inquiry. Right, responses to inquiry to corroborate evidence, even that is an integral part of the inquiry process. Right, again you need to make inquiry of the management's intent. Like, you know, what is the basis for classifying an investment as a long-term investment or a current investment? What is the basis for classification of an investment as long-term or current investment? If you want, if the management says we are going to hold it for more than 12 months, then long-term investment, less than 12 months, then it is a current investment. So obviously that depends upon the management's intent, then depends upon the management intent. Then whatever they say, do they walk their talk? So management's past history of carrying out the intention. So they said that we will sell it not before 12 months. They sold it after 3 months only. So are they walking their talk in that case? No. So management's past history of carrying out its stated intentions, and also the auditor may consider it necessary to obtain the written representation, that whatever you told me orally, also give me a written representation for the same. Why? Because what we say, written evidence is more reliable than the oral evidence. Okay, right? So that is regarding the inquiry. So see, you should know so much of the story so that you can write a retail answer when only a question comes on the inquiry in the exam. Right, so inquiry, and then you have the observation, recalculation, reperformance. Right now what am I discussing with you is the risk assessment procedures, then the further audit procedures. Further audit procedures, TOC and substantive. Risk assessment procedures, what did I tell you? We discussed it in SA 315, right? So right now coming to the further audit procedures, in that coming to the TOC. One, what is the question over there? What is the meaning of TOC? right? What is the meaning of TOC? In which you check the operating effectiveness of the control. And what controls have to do? They have to PDC. What is PDC? Prevent or detect and correct. If they don't detect only, what they will correct? So first they have to prevent or they have to detect, and if they detect, then they also have to correct. If you find something wrong, it also needs to be corrected. So what is TOC? Defined as an audit procedure designed to evaluate, to check the operating effectiveness of control in PDC. PDC, preventing or detecting and correcting a material misstatement at the assertion level. What does it say? TOC, in which you check the design, implementation and the maintenance of internal control. How do you perform TOC? Inspection, inquiry, observation and the reperformance. Did I discuss that with you? Yes, right now? Okay, so that's the first question. What do you mean by TOC and what is included in TOC? Next question, what is the need to perform TOC? What are the two words I told you? Need to perform TOC. Auditor's assessment of RMM includes an expectation, and substantive alone cannot provide the evidence to the auditor. So that is the need to perform the TOC. Then after that we have a question over there, the nature of the TOC, the timing of the TOC and the extent of the TOC. Are you all with me? What is TOC? What does TOC include? Then what is the need to perform the TOC? Then expectation and alone. Then after that we have the question on the nature, timing and the extent of TOC. Nature, yes, what do you mean by nature? What audit procedure is to be performed? What checking is to be done? Timing means what? On which date it is to be done? And extent means what? See, nature, timing and extent. This is favorite terminology of audit, no? So what do you mean by nature, timing and extent? Nature, timing and extent of audit procedure. So now here we are talking about the nature, timing and extent of TOC. Does everybody understand now when I say audit procedure, it means risk assessment procedure, further audit procedures, TOC and substantive. So it means the entire audit. Right. So what do you mean by nature, timing and extent? Nature means how to check, right? Timing means when to check, and extent means how much to check. So extent simple means sample size, number of samples to be checked. Nature, timing and extent, how to check, when to check and how much to check. That is what you mean by nature, timing and extent of the audit procedure. So now I am talking about the nature, timing and extent of the TOC, right? So nature means, what does it say? One, in combination with inquiry, you need to check whether the controls were applied at the relevant time, the consistency by which they were applied. Consistency means I want to check the maintenance and the implementation and the maintenance, and by whom and by what means were they applied, and whether there were any other controls also, right? So that is the nature. So this is what I want to check, and this is what I want to check. Then timing, whether I want to check it for a particular time or whether I want to check it throughout the period. Like, depreciation entry, it is passed only at the end of the year or only at the end of the quarter, but sales entry, it will be passed many times a day. Salary entry, it will be passed 12 times in a year at the end of every month. Are you understanding? So you say, no, I want to check salary controls every day. Array, salary controls are not there only every day. How you can check it every day? You want to say, I want to check, say, depreciation every day. Not possible. Depreciation entry, it is taken, say, only once in a year. Right? Or you want to say, I want to check sales every day. That is possible. Why? Because sales transactions are recorded on an everyday basis. So timing, when you want to test the control, as at a particular time or throughout the period. Okay, right? And then the extent of TOC. So again, a retail question asked in your exams. Okay, extent of TOC. Extent means what? Sample size, number of samples. So what does it depend on? The frequency of the performance. Like I told you, sales control, what is the frequency? Many times a day. Salary, 12 times a year, and depreciation once in a year. So will that affect my sample size? Will that affect my sample size? Yes. Then the length of time for which the auditor wants to rely on the control. So say I'm doing the audit only for 6 months. So obviously I want to rely on the control only for 6 months. So even if it is followed for 12 months, I will check only for the 6 months. Next one, the expected rate of deviation. The more the deviation the auditor is expecting, the sample size will increase or decrease? I'm expecting more deviations. Will I check more samples or less sample? Obviously, we'll check more sample. Then the relevance and reliability of the evidence to be obtained regarding the operating effectiveness. The more the evidence, the more the checking or less the checking? Auditor wants more evidence regarding the operating effectiveness of control. Will he do more checking or less checking? Right? I want more evidence. When I say this much only, you should say, ma'am, more checking. The auditor wants more evidence regarding the operating effectiveness of control. So should the auditor do more checking or less checking? Yes, the auditor should do the more checking, and the extent to which evidence is obtained from the test of other control. Like, what does it mean? When I am checking the purchases, that time I am checking some cash controls. है ना? Cash controls. Then when I am checking the payment to the creditors, that time again I am checking the cash control. So same cash, is it being checked at two places? Same cash controls, is it being checked at two places? So relatively at one place, can the checking be less? Yes, relatively at one place, can the checking be less? Yes. So test of other controls related to the assertion. Right. So extent of TOC, it depends on the frequency and the length of time. It depends upon the expected rate of deviation and the evidence the auditor wants to obtain regarding the operating effectiveness, and it also depends on the evidence obtained from the test of the other controls related to the same assertion. Do you understand assertion? ERCV, OCACC and ORCVC. Okay, right. So that is the extent of the TOC. Extent of TOC. Next one. So now I am coming to the sixth question. Is it right? Now I am coming to the sixth question. What is the sixth question over there? Use audit evidence obtained in the previous audit. What heading am I discussing with you right now? TOC. That means what? 2025. You did the control testing. Now you are doing the audit of 26. Should you do the control testing again? Right, so 2025, did I do TOC? Yes. Now 26, should I do TOC again? Or should I use the evidence which I obtained in the previous audit? It says you can use the evidence which you have obtained in the previous audit, but it depends on the following factors. Right, so again, a favorite question of ICAI, retail question asked in your exams. Are you understanding that? Using audit evidence obtained in the previous audit. What does that mean? Sorry. Okay, 2025, did auditor test the controls? Yes. Now 2026, auditor is thinking whether I should use the results of TOC which I did in the previous audit, or should I perform the control testing again. Right, so last year when I tested the controls, I found the controls to be very effective. Right, so what will I do? Should I do TOC again, or can I use the evidence obtained in previous audit? 2025, I did the control testing. I found the controls to be effective. So now should I use the evidence which I obtained in 25, or should I do the control testing again in 26? In 2025, I did control testing. I found that controls in the organization are effective. The controls are good. They are operating effectively. Can I use the same evidence for 2026? Yes, when the controls are operating effectively, effectiveness of control is there. I come to know there are good controls. See, if I want to check, I can check. But can I use it? Yes. But when I come to know, okay, oh my God, 2025 company, horrible control. Now 2026, will I use the results which I got in 2025? I say no, 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 very dangerous control. Let me do the TOC again. Then I will not use the evidence obtained in the previous audit. Are you understanding? The risk is less. Can I use the results of TOC of 2025 when the risk is less? Can I use the results of TOC performed in 25 when the risk is less? Yes, but when the risk is high, I say no, 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 no using evidence obtained in previous audit. We will do the TOC again, right? We will do the TOC again. Okay, right? So, your blank faces in the class tells me regarding the the success rate of the students in the exam, but no problem, better later than never, right? So at least now you are coming to know what we are talking about over here. You have to absorb the subject of audit. You have to know what is happening in the subject of audit. Otherwise, nothing will happen for you in the exam. Right? So using evidence obtained in the previous audit, it depends upon the effectiveness of other elements of control, effectiveness of the general IT control, effectiveness of the controls and its application by the entity. And next, it depends upon the risks arising from the characteristics of the control. Then the risk due to changing circumstances, and the risk of material misstatement, and the extent of reliance of the control. So 3 points of effectiveness and 3 points of the risk. Are you understanding that? What is the question regarding whether I should use the evidence obtained in the previous audit? I did TOC in previous audit. Should I perform the TOC again in this audit, or should I use the evidence obtained in the previous audits? Are you getting that? Should the auditor use the evidence obtained in the previous audit? Right, so that is question number 6. Then question number 7. What is question number 7? Evaluating the operating effectiveness of control. What does it mean? While evaluating the operating effectiveness of control, the auditor shall evaluate whether misstatements detected by the substantive procedures indicate that the controls are not operating effectively. That means what? Okay, I am doing the audit procedures. In that risk assessment procedure, then further audit procedures, in that TOC and substantive. So now based on the results of TOC, I determine the nature, timing and extent of substantive procedure. That you understood. But now I started doing substantive procedure, and in the substantive procedure I identified a misstatement. Misstatements have been detected by the substantive procedure. So then I might get a reverse conclusion over there also. Okay, no, if there is a misstatement in substantive, I found out an error in rent. Okay, rent is not properly recorded. Then I might say that the controls are not operating effectively for rent. So can it work reverse way also? Yes, it can work reverse way also. Only see, based on results of TOC, I decide how much of substantive to do. I actually start doing the substantive. In the substantive, I find out a misstatement. Then obviously that's a indication for me reverse that the controls may not be operating effectively for the rent. Okay, right. So if I detect a misstatement through substantive procedures, it is a strong indicator of a deficiency in internal control. If I detect a misstatement in the substantive procedure, it is a strong indicator of the deficiency in the internal control. But if there is an absence of misstatement, no misstatements have been detected through the substantive procedure, does not necessarily mean that controls are operating effectively. So just because I don't find out a misstatement, then will I say controls are effective? No, that risk I will not take. But if I find out a misstatement, will I say it's a strong indicator of deficiency? Yes. So that's what they say. Absence of a misstatement does not provide evidence that controls are operating effectively. But presence of a misstatement is a strong indicator of a significant deficiency in internal control. How you can write this by learning and memorizing unless and until you understand? Right, so what does it say? Misstatement detected by substantive procedures may help the auditor to conclude that controls are not operating effectively. Then misstatement detected by substantive procedures is a strong indicator of a deficiency in internal control. But the absence of a misstatement detected by substantive procedure does not necessarily mean that the controls are operating effectively. Right, so that's regarding the evaluating the operating effectiveness of control. And then after that, when you find out a deficiency in internal control, what does it say? What auditor needs to do? The auditor should check whether TOC gives the evidence for reliance on the control, whether additional TOC is necessary, or whether potential of risk of misstatement needs to be addressed using the substantive procedures. Right, so whether he can place reliance, whether he needs to test the additional control, or whether he needs to consider the potential of RMM while performing the substantive procedures. Right, so have I discussed 8 questions with you regarding TOC over here? Right, everybody, all these questions are there in the question bank. Yesterday I showed you items of financial statement. The question bank flows in the sequence of the chapter. So if you see the question bank, you'll see all these varieties of questions over there. Right, but do you at least understand these points over here? Okay, right. Then after that, now coming to substantive procedures. Substantive procedures, what is that? Test of detail, substantive analytical procedures, or a combination of both. And in addition to that, as a part of your substantive procedures, you also need to agree the financial statements to the underlying records and examine the material journal entry. Do you remember substantive procedures? What are we say? What are the 4 types of substantive procedures? What are the 4 types of substantive procedure? Test of details, vouching verification, substantive analytical procedures, then agreeing the financial statements to the underlying records and examining material journal entries. So that is what is discussed over there. Right, through my RMM, right, when I do my risk assessment procedures, out of all these items of the financial statement, can I say these items there is an RMM? By 315, can I say out of 300 items of financial statement, these areas there is an RMM? Yes, out of these, can I say in these areas there is an SR? What is SR? Significant risk. Obviously, will I increase the nature, timing and extent of my audit substantive procedures where there is an SR? I'll do VVIP treatment. No, I said maximum checking will be for this area. Then will I perform substantive for all areas? Yes, but obviously for where there is risk, the substantive will be more. Where there is significant risk, the substantive will be much more. You understand? No, VVIP. So I told you, no, we are doing a risk-based audit approach. The more the risk, the more the checking. Does not mean that if there is no risk, we don't do checking. Checking we will always do. Like example, let me take, like say purchases. You say, ma'am, whether there is a risk in purchases or no risk in purchases, I am going to check 20 samples. But because now, ma'am, you said that purchases, there is an RMM. That is why instead of 20, now I decide to check 30. And because, ma'am, you said that it could be a significant risk, that is why now I decided to check the 50 samples. Are you understanding that? So just because so anyways, had there been a risk or not a risk, would I have always checked 20 sample? Yeah. But when there is an RMM, I increase the nature, timing and extent of my audit procedure. And when that RMM is an SR, I further increase the nature, timing and extent of my substantive procedures, right? So what does it say? Substantive procedures to respond to the significant risk, right? Auditor needs to perform substantive procedures specifically responsive to that risk, right? And if you're only performing the substantive, then those substantive have to be the TOD for a significant risk. Again, they ask this in the correct and incorrect, right? Because what is the option we have in substantive procedures? Test of detail, substantive analytical procedures, agreeing to underlying records and journal entry. So last two are to separate only. These are additional checking. What are the main two checking? Whether to do detailed checking or analytical checking. And now I have to do substantive procedures for an area where there is significant risk. Can I do both detailed and analytical? Yes. Where there is a significant risk, can I do both detailed or and analytical? Yes. Can I do only analytical? No, that is not possible. Can I do only detailed? Yes, that is possible. Because there is a significant risk. How you can rely only on the analytical? There is a significant risk. So should you do test of detail? That is compulsory. Substantive analytical is optional. You may do, you may not do. For which areas? Those areas where there is a significant risk. And you're saying there is a significant risk and you did only analytical. Then not right. If you say there is a significant risk, you should always do some amount of the test of detail. So when the approach to significant risk consists only of the substantive procedures, then those procedures shall include the test of detail. So analytical may or may not, but test of detail has to be there. Are you understanding that? Okay. Right. Then SA 500 also talks about this very interesting concept over there, wherein it says that evidence to be obtained by the auditor, it should be, right, the audit evidence to be obtained by the auditor, it should be sufficient and appropriate, right? So it should be sufficiency and also the appropriateness of the audit evidence. That is why everywhere what term we use? Sufficient, appropriate audit evidence, SAAE. Quantity has to be right and quality also has to be right. And a quantity cannot compensate for quality and quality cannot compensate for the quantity. And appropriateness means two things. It should be relevant and it should be reliable, right? It should be relevant and it should be reliable. Now here we have a question, factors affecting the sufficiency of the audit evidence. So now we talk about the, right, sufficiency, appropriateness, right? What is sufficiency? The quantity, right? Sufficiency means what? The quantity, right? And what are the factors affecting the sufficiency of the audit evidence over there? Factors affecting the sufficiency of audit evidence, MRS. Again, a favorite question of ICAI. Right? Sufficiency means what? Quantity. Quantity means what? Number of samples. Right? Quantity means what? Number of the samples. So that depends upon the MRS. What is MRS? The materiality, the risk of material misstatement and the size and characteristics of the population. Right? And the size and characteristics of the population. The higher the materiality, right, as the size and characteristics of the population, right? So obviously the higher the materiality, what does it say? The more the item is material, the more evidence would be needed. And if it is less material, then obviously less evidence would be needed. Are you reading it over here? Less evidence if it is less material, and more evidence if it is more material. So one, it depends upon the materiality. Obviously 70 lakh voucher and 7,000 voucher, for which voucher I want more evidence? 70 lakhs. So if it is more material, more evidence, less material, less evidence. Second, it depends upon the RMM. If risk is more evidence, and if risk is less than the less evidence. Are you understanding that? Right. So what does it say? Less evidence for lower RMM and more evidence for the higher RMM. More evidence for higher RMM and less evidence for the lower RMM, right? And it depends upon the size and characteristics of the population, right? What does it say? Less evidence required for the homogeneous population and more evidence required for the heterogeneous population, right? So more evidence for the heterogeneous and less evidence for the homogeneous population. So factors influencing the sufficiency of the audit evidence. What is sufficiency? Quantity, sample size, 1, 2, 3, 4. How many samples to check? It depends on the materiality, it depends upon the RMM, it depends upon the size and characteristics of the population. Everybody, these are all questions. I told you, 1,000, 2,000 question. Out of that, one or, some 40, 48 questions come in the exam. Like from basic concepts in audit, some 1 or 2 questions come in the exam. But we don't know which are going to be those questions, right? So factors affecting the sufficiency of audit evidence, MRS. Okay, right. Then factors influencing the appropriateness of audit evidence, it depends upon the relevance and the reliability. And again, a super favorite question of ICAI, ATF top 10. Factors affect principles useful in assessing the reliability of the audit evidence. And now, what are the principles useful in assessing the reliability of the audit evidence, right? So what are the principles useful in assessing the reliability of the audit evidence? So one, what do we say? Written evidence is more reliable than the oral evidence. Then what do we say? Evidence obtained from independent sources from outside the entity more reliable than that obtained through the entity. Evidence which is directly obtained by the auditor is more reliable than that obtained through the entity. When controls in the organization are effective, even the internal evidence is more reliable as compared to when the controls are not effective. And original documents are more reliable than photocopies, facsimiles, etc. Right? So principles useful in assessing the reliability of the audit evidence. And a VIDCO, right? What is VIDCO? Written evidence is more reliable than oral evidence. That means evidence in documentary form is more reliable than the oral form. Then evidence obtained from independent sources more reliable than that obtained through the client. Then evidence which is directly obtained by the auditor more reliable than which is obtained through the client inference. Then when controls in the organization are effective, even the internal evidence is more reliable as compared to when the controls are not effective. And original documents are more reliable than the photocopies, facsimiles, etc. Everywhere you need to have the comparative. Okay, it is more reliable as compared to what? Okay, right. So what are the points I told you we have over there? VIDCO, right? VIDCO, right? What do you mean by VIDCO? Right, written evidence. Then the evidence obtained from the independent sources, directly obtained by the auditor, controls are effective, and original documents. And everywhere you have to give the comparison. What comparison you will give? Okay, written evidence is more reliable than the oral evidence. Then after that, independent sources is more reliable. Then outside the entity, then from within the entity. Then evidence obtained directly by the auditor is more reliable. Then controls in the organization, if they are effective, then even the internal evidence would be more reliable, right? So if controls are effective, even the internal evidence would be more reliable, and original documents are more reliable than the photocopies, facsimiles, etc. Right? Day one, I had discussed with you NNOT, nature and inherent limitations of audit. And what steps did I tell you over there? Okay, one, when like now, right now, principles useful in assessing reliability of audit evidence. First, what has to click to you? VIDCO. Then what has to click to you? Okay, what does this VIDCO stand for? Then what has to click to you? That you know for each of them what sentence I'm going to write over there, right? Then what has to click to you? The writing. Okay, I know the points, but whether I'm able to write. Then what I have to check? My time management and my presentation, right? My time management and also my presentation. When you have an expertise, a culmination of all the attributes in your study, only then you will get good marks in the exam. You reach only up to step 2 or 3, nothing will happen for you. You'll have to write the exams again after 6 months. I'm being very blunt, but I'm putting the reality in front of you, right? You have to do very good qualitative study. Are you understanding, right? You have to grind it, you have to put it, make the fine powder out of it, right? So principles useful in assessing the reliability of the audit evidence. Is it clear to everyone? Right, so we've covered a very important standard over there, that is SA 500, right? So in chapter 2, as such in our book, what is the name of the chapter? Basic concepts in auditing. And what are the basic concepts we discuss over there? Audit risk, right? Then audit evidence and the audit procedure. So did I discuss audit evidence with you? Yes. And now we come to the third part, which is the audit materiality. Yes, materiality. For that, which is the essay we have, essay 320. What is the title of 320? It is not audit materiality. What is the title of 320? What is the title of essay 320? Materiality in planning and performing an audit, right? Materiality in planning and performing an audit. Are you understanding that? Essay 320, materiality in planning and performing an audit. Are you getting that? Okay, right. So what is materiality? Any item or information which might influence the decision making of the users of the financial statements, which might influence the decision making of the users. Am I talking about a specific set of users or a common set of users? Common set of users, because individually if I see, everybody might have something else in their mind, but I say generally, for a common set of users. Okay, what is the overall objective of SA 200? To obtain reasonable assurance that financial statements are free from material misstatement. Which type of misstatement? Material misstatement. That means they should be free from material fraud or error. That means immaterial is okay. And any immaterial fraud or error, okay. But what does it say? Material misstatement should not be there. And materiality is not only quantitative in nature, it is also qualitative in nature. It is not only quantitative but also qualitative. Like you say, if you see a fraud of 2 crore, then quantitatively material. But you see the company has given a bribe of 10,000. Now quantitatively not material, but qualitatively yes, because it is a bribe given by the company of 10,000. Or there is a non-compliance with law regulation. So again, quantitatively may not be, but qualitatively, yes, it could be material. Are you understanding that, right? So quantitative as well as qualitative in the nature. Okay, right. So now, yes, when we are talking about the AFRF also, what is AFRF? The applicable financial reporting framework. That also talks about the concept of materiality, right? When you prepare the financial statements, just as auditor, when he is doing the audit, he considers the concept of materiality. Management, when they are preparing the financial statements, even they apply the concept of the materiality. Is everybody understanding? When management prepares financial statements, they also follow the principles of materiality. Like you have no materiality, prudence and substance over form. And management also considers the concept of materiality. And auditor, when he is also doing the audit, he also considers the concept of the materiality, right? So one of the questions over there is concept of materiality as per the AFRF. FRF, the financial reporting framework, right? So one, it says, when would you say that it is material? If it could influence the decision making of the economic decisions of the users. Then it also depends on the size or the nature of the misstatement, or a combination of the both, right? It depends on the size. So I told you size is 2 crore. So you say it is material. Or the nature. Nature, it's a bribe paid of 10,000. So then also you say it is material. So it depends on the size or the nature of the misstatement. That means simple language, not only quantitative but also qualitative in nature. And am I talking about the needs of a specific set of users? No, we are talking about the common financial information needs of the users as per group. The possible effect of misstatements on specific individual users may not be considered. Right? We are only talking about the common financial information needs of the users. Everybody, do you understand this question over here? Concept of materiality as per FRF. So what is the concept of materiality? Any which could influence the economic decision of the users. For that you need to consider the size or the nature of the misstatement, and again you need to consider the common financial information user needs and not the specific user needs. Right? The specific, no, only the common needs. Are you understanding that? The concept of materiality as per the FRF. Okay, right. Now, what is materiality? What is materiality? Any item or information which might influence the decision making of the users. Who are the main users of the financial statements? The shareholders, right? Who are the main users? The stakeholders, the shareholders of the company. Now, who is determining materiality for the purpose of the audit? Who is to determine the materiality? Auditor. Are shareholders going to tell him that, see, auditor, anything above 10 crore affects my decision, so you please tell me? No. Auditor has to decide on his own. Okay, what could be that amount which could influence the decision making of the users? So auditor needs to decide what could be that amount which could affect the decision making of the users. So for that, auditor needs to make the professional judgment. Are you understanding that? Auditor needs to guess. He needs to get to guess it professionally. Professional judgment. Okay, what could be that amount which could affect the decision making of the shareholders of Infosys or of the stakeholders of Infosys? Because who determines materiality? Auditor. But whose decision making gets affected? The decision making of the users. So how do I as an auditor decide what could be that amount which could affect the decision making of the users? The auditor needs to apply the professional judgment. So determination of materiality is a matter of the professional judgment. It depends upon what? Reasonable knowledge of the business, that the users, you know, who the users? The stakeholders of Infosys. This, it assumes that the users have reasonable knowledge of business and economic activities, have reasonable economic decisions, make reasonable economic decision, and also understand that financial statements are prepared, presented, and audited to the levels of materiality. Okay, management has also followed materiality while preparing, and auditor has also followed the materiality while auditing, and then recognize the uncertainties inherent in the measurement of the amount based on the estimates, judgments, and the consideration of future event. All this auditor has to assume regarding the users. What he has to assume regarding the users? Okay, users have a reasonable knowledge of the business and economic activities. The users make a reasonable economic decision, that they understand that financial statements are prepared and audited to levels of materiality, and then they know that there are uncertainties which are involved in the calculation of the estimates. Right? So what assumptions you need to make regarding the users while doing the determination of materiality? Who determines materiality? Auditor. For auditor, it is a matter of the professional judgment. And what he needs to check? What he needs to assume regarding the users? He needs to assume that users have a reasonable knowledge, they make reasonable economic decision, they understand that financial statements are prepared and audited to levels of materiality, and they are recognized the uncertainties. Like, there is no way on earth by which you can calculate the exact amount of provision for bad and doubtful debt. There is no exact way for calculating provision for taxation. It can only be an estimate. It can only be an estimate. Right? So are you getting these offbeat questions over there? Concept of materiality as per FRF. Then assumptions regarding the users when auditor has to determine the materiality, because for auditor it is a matter of the professional judgment. Okay, right? Then what type of relationship is there between materiality and audit risk? Inverse relationship. Higher the materiality, lower would be the audit risk, and lower the materiality, higher would be the audit risk, right? So there is an inverse relationship between materiality and the audit risk, right? There is an inverse relationship. Okay, right. Then how to determine materiality? right? So far I have just randomly taken some amount, 2 crore, 10 crore and all. But practically when I have to do an audit, how does the auditor determine the materiality? So for the determination of materiality, we have the concept of the benchmarking, right? So from the financial statements, you need to select an appropriate benchmark. To that benchmark, you need to apply a percentage, and whatever is the resulting amount, that will be materiality. What benchmark to take? Professional judgment. What percentage to take? Professional judgment of the auditor, but that's the formula. Say example, auditor said, oh yeah, sales is a good representative of financial information, and he says I want to take 1% of sales, right? Sales of the company say are 100 crore, so 1% of 100 crore, 1 crore is materiality. Yes, so this is how we determine. We take a benchmark, we take a representative from financial information. What representative to take? Professional judgment of the auditor. What benchmark could be taken? Sales of the company, profit before tax, profit after tax, gross profit of the company, assets of the company, expense of the company, equity of the company, professional judgment of the auditor. And to the chosen benchmark, you apply a percentage. Whatever is the resulting amount, that is going to be the materiality. Right, so generally in practical life, what happens in case of the software company, we take the revenue as a benchmark, whereas for a manufacturing company, we generally take the profit as a benchmark. That is generally. But what does the standard say? You select a benchmark. Benchmark is what? A leader from the financial statements. Benchmark is what? Leader, no? Representative. Like in college, you have a CR, no? Class representative. Right, so you select a representative. Okay, entire financial statements, what could be that one figure which could represent entire financial statements? Say sales. Then what percentage of sales? Say you take 1%, 10%, 2%, professional judgment of the auditor. You multiply the two, and whatever is the resulting amount, that is materiality. Are you understanding that? Right, determination of materiality, the percentage is often applied to a chosen benchmark. And what are the benchmark which could be taken? Right, profit before tax, total revenue, gross profit, total expense, total equity, net asset value, etc. Right, these could be the benchmarks which could be taken. Are you understanding that? Okay, right. Then again, a favorite question of ICAI: factors that may affect the identification of an appropriate benchmark. That how do I select, how do I know, okay, which benchmark I should take, right? Factors that may affect the identification of an appropriate benchmark. And what are the factors we have over there? Venus, right? What is Venus over there? V stands for the volatility of the benchmark. E, the elements of the financial statement. N, the nature of the entity. U, the users of the particular entity. And S, the structure of the entity, right? So we have the Venus, V, E, N, U and the S. Right, factors that may affect the identification of an appropriate benchmark. So while I see that the sales of the company are very fluctuating. Is it a good benchmark? I see that the sales of the company are very fluctuating. Is it a good benchmark? No. So it should not be very volatile. The elements of the financial information. What are the elements of the financial information? Like say I'm doing the audit of a bank. So what is going to be there in bank? There will be advances and deposits. Obviously, then can I take advances or deposits as a benchmark? Right. So it depends on the elements of the financial information. But if I want to do the audit of, Infosys, then will I have advances and deposits over there? No, there will be revenue. So it depends upon the elements of the financial information. Next, it depends upon the nature of entity. Like I told you, for a manufacturing company, we take profit as a benchmark, whereas for a software company, we generally take the revenue as a benchmark. What is materiality? Any item or information which might influence the decision making of the users. So you need to consider what the users are interested in, on what they are focused on. You say, ma'am, users are interested in the profit of the company. Very good, then take profit as a benchmark. And also the structure of the entity, how the entity has been financed, right? The company is an equity infused company, then equity is a good benchmark. The company has taken a lot of debt, then debt is a good benchmark. So you consider all these factors, and after all these factors, based on that, you determine what benchmark you want to take. What factors you need to consider? Volatility, Elements, nature, users, and the structure of the entity. Factors to be considered in the identification of an appropriate benchmark. Are you understanding that? Okay. Now say I decide I will take sales of the company as a benchmark. Okay. Now I have to do audit for which year? 31st March 2026, and what I have decided, I will take the sales as the benchmark. Okay, now do you think that I start planning my audit say since February? Since February 2026 I start planning my audit. So now will 31st March sales be available on in February 2026? No, but you say I want to start planning the audit right away. Right, so now how to take that sales as a benchmark? It says take the prior period financial result. Okay, how much were the sales of the company previous year, or till February what were the sales? So period to date financial results and the financial position, or what is the budget of the sale of the company for 2026, or adjustment, and then you need to adjust it in the circumstances of the entity. Because I take, okay, I say that take sales as a benchmark, but now maybe that figure is not readily available. So how do I take that figure? Based on the prior period financial result, the period to date financial result. Okay, up to December the sales of the company are known, right? Or budget, okay, what is the expected sales of the company for 2026, and then the adjustment, right? Adjust for any significant changes in the circumstances. Are you understanding this point over there? Okay, then later on, obviously first I took it on the basis of budget, then later on will the actual sales of the company be available? Right, then based on that, can I revise the level of materiality again? Yes. Right, as the, because first tentatively I knew na, okay, sales of the company are somewhere 100 crore. So based on that I determine materiality. But now say actual sales are 120 crore or actual are only 85. Then could I revise the materiality? Yes, auditor, you can revise the materiality. Right, so what does it say? Materiality levels for particular account balances. Right, one, I determine materiality for the financial statements as a whole, and second, I can also determine materiality for the individual account balances. Okay, for full financial statements materiality is 1 crore, but for debtors materiality is 20 lakh, for creditor materiality is 30 lakh, for inventory materiality is 40 lakh. Is it possible? Yes, auditor can set such multiple levels of the materiality. Okay, so now it says materiality level for particular classes of transaction account balance and disclosure. It depends upon the law regulation, it depends on the disclosures relevant to the industry to which it operates. Like law regulation, like say if I want to report on statutory dues, then I have to check for all statutory dues as per CARO. Right, so there I cannot apply the concept of materiality. Right, there I should not apply the concept of materiality. But say if I'm checking inventory or so, then I can apply the concept of the materiality. Like when I'm checking the, what do you say, related party. Right, so again related parties, I need to report all related parties. So again it will be a different application of the materiality. And again attention is focused on a particular aspect that is separately disclosed in the financial statements. Right, so these are the factors which will affect the materiality for a particular class of transaction, account balance, or the disclosure. Okay, and as the audit progresses, can the auditor revise materiality? Yes, auditor can revise materiality due to three reasons. C and C. What is C and C? Change in circumstances, or any new information, or any change in the auditor's understanding of the entity and its operations as a result of performing the further audit procedures. Right, so can auditor revise materiality as the audit progresses? Yes, one, due to the change in circumstances, right? Or second, due to any new information which auditor did not know about it previously, or any change in the auditor's understanding. Okay, earlier for this company I thought revenue is important. As I did my audit, I came to know, no, revenue okay, but profit is more important. So change in circumstances as a result of performing the further audit procedures, right? So this is revision of the audit materiality. Okay, and that is SA 320, materiality in planning and performing an audit. Right, at least you know something now regarding 320. Right, so all the three concepts, do you know something about it now? What are the three concepts I discussed with you? Audit, risk, audit, evidence, in that audit procedures and all of that. And then after that the audit materiality, that is SA 320, materiality in planning and performing an audit. Right, the nerve of this chapter is in the audit risk and audit procedures. Right, what is audit procedures? Once again tell me, so that then we can go to the next chapter. Audit procedures. risk assessment procedures and the further audit procedures. Further audit procedures, TOC and substantive. Risk assessment procedures to identify, assess the RMM. Further audit procedures to manage the detection risk. And then TOC, we saw 8 questions regarding the TOC. And then after that, substantive procedure, test of details, substantive analytical procedures, agreeing the financial statements to underlying records, and examining material journal entries. Okay, right. So let's come to the next chapter, analytical procedures, right? So now we study 2 more chapters over there, analytical procedures and the audit sampling. Okay. Right, so all of you with me? Right, so now let's come to the next chapter for our discussion over there, which is regarding the analytical procedures. Right, everybody, all good? Okay, right. So now analytical procedures, which is the auditing standard that we are discussing over here, SA 520, which is regarding the analytical procedures. So again, as we do for our special chapters, what we will do first, try to get a snapshot, right, our Google map location of what all is happening in this particular chapter, right? So one, in SA 520 we discuss about the meaning of the analytical procedures, right? Meaning of analytical procedures. Then 520 also says that auditor, you need to perform, right? Or this chapter also says that you need to perform analytical procedures throughout the audit. Throughout the audit means planning stage, you need to perform analytical procedures. That is discussed in SA 315. Right, 315. Some time back I discussed with you over here. Right, let me find out that page. Right, we some time back discussed over here regarding the, see, risk assessment procedures. What did I write? I, inspection, A, analytical procedures, inquiry and observation. That means I'm talking about analytical procedures at the risk assessment stage. So that is SA 315. Are you able to follow that? Right, then we also have analytical procedures to be performed at the substantive procedure stage, right? Substantive procedures, wherein we have the substantive analytical procedures, which we study in SA 520. And then we have analytical procedures to be performed towards the conclusion of the audit, that is near the end of the audit. And that is also discussed in SA 520. So planning stage analytical procedures discussed in 315, and substantive procedure and conclusion stage discussed in SA 520. Right, discussed in SA 520. Are you able to follow? Yes, that means analytical are to be followed throughout the audit. Then another question, the purpose of analytical procedures and also the timing of analytical procedures. Right, the purpose and the timing of the analytical procedures, right? Then you have a question over there regarding the factors to be considered while performing the substantive audit procedures. Be careful, I'm not talking about substantive analytical. What have I written? Factors to be considered while performing the substantive audit procedures. Substantive audit procedure. Does everybody know what is substantive audit procedure? TOC and substantive. And in substantive, we have 4 types: test of detail, substantive, analytical. So factors to be considered while performing the substantive audit procedures. Then next question over there, the factors to be considered while performing the substantive analytical procedures. Now talking about the factors to be considered while performing the substantive analytical procedures. Did everybody notice the difference in the 2 words? Factors for substantive audit procedures and factors for substantive analytical procedures. What are the factors for substantive analytical procedure? We have SREM, right? The suitability of using substantive analytical procedures, the reliability of the data to be used for performing the analytical procedures, the reliability of the data. Third one, are you able to build up an expectation to identify a misstatement? And the fourth one is the materiality. For each of this SREM, again there is a retail question. So one, we have the wholesale question. What is the wholesale question? The factors to be considered while performing substantive analytical procedures. What are the four factors? Suitability, reliability, expectation, and materiality. Then for each one of them, we again have a separate question. Suitability, reliability, expectation, and materiality, right? I forgot to mention in the beginning, but obviously one of the most important question in this chapter is going to be how to perform analytical procedures. They say, auditor, go and do analytical procedure. So you have $1 million thought in your mind, okay, how to do, what can I do so that I say I have performed analytical procedure. So how to perform analytical procedures? There are two ways to perform analytical procedures. One, you can do the comparisons, or second, you can check for the relationships, right? Either you do the comparisons or you can check for the relationships, right? Then what happens? Sometimes you have to investigate the results of analytical procedure. So again, a question, investigating results of the analytical procedures, right? Investigating the results for the analytical procedures. And then after that, we also have a question over there, okay, analytical procedures for the public sector entity. Like it says private sector entity, you can easily perform, but like for a government entity, it says it is difficult to perform analytical procedures. So what are the challenges in performing analytical procedures for the public sector entity, right? So this is the roadmap. This is the content of discussion for the chapter of the analytical procedures. Had I been at your place preparing for the exams, obviously one, I would have studied every chapter in detail, because my conscience would never permit me to not study or leave anything in option. But certainly I would have done these chapters very well, like analytical procedures, audit, sampling, because again, every exam we see a question from these chapters in the exam, right? So again, we see a question in every exam from these chapters, right? So again, if you look at an analysis, you never should look at any analysis, but there is a trend among the students. So this is as per the book from which I am teaching you. You have ICI study material, which gives some different bifurcation of the chapter, right? So introduction to auditing comes, doesn't come, basic concepts, little bit here and there. Engagement letter, audit report, quite regular in the exam, right? Engagement letter, audit report, risk assessment, internal control, again lot of questions coming in the exam. Now fraud, what do I say? May 22 9 marks, and then November 21 0 mark. So what to rely and what not to rely, or not to predict and not predict over there, right? Then audit quality control, audit documentation, audit strategy, audit plan program. Then if you look at this, analytical procedures, quite a regular one, right? Analytical procedures, is it quite regular, right? Audit sampling, is it quite regular? Both of these, analytical procedures, audit sampling. Then you have an audit in an automated environment, again a regular one, right? Audit in an automated environment. Company audit, number 21, and a shooting from the roof, 17 marks. And then May 22, 4 marks. What to do? Nothing. I to think one should not see only any this type of analysis only. Okay, right? Then Caro, obviously lot of new questions they have, so that is being coming. Items of financial statement, again very regular here, 8, 10, 7, 15, 9, 10, 14, 15, 25. Super. You understand? No, so many questions coming in the exam, but that was when the paper was of entire 100 marks used to be of the theory part. Now we have 90 marks of the paper. So why 90 marks? Because this I'm only talking about the theory part, 70 mark of the paper. Apart from this, what is coming in MCQ, that you only know, I don't know, because suggested MCQ we don't get to see. Question paper MCQ, do I get to see them? No, only it's a secret which only you and I know. The faculty doesn't know about it. Okay, right. So anyways, the items of the financial statement. Then audit of bank, again a very regular one, right? Cooperative society, visiting chapter. Government audit, again a visiting chapter. Different types of entity, again quite a regular one, but sometimes coming for 3 marks, and sometimes coming over there even for the 11 marks, right? So 3 marks, or sometimes even coming for 11 mark. And standards on auditing, so all your other standards. So some standards we cover in the beginning chapters, like engagement letter, audit report, but all the other standards, right? Again, 14, 10, 10, 7, and some or the other marks coming over there. So when you see this, you get more convinced, okay, I need to study everything. Right, when you see this analysis over here, it says better I don't see the analysis, because anyways I understand I need to study everything over there. Right, so anyways, now coming to the analytical procedures. Right, so just because I mentioned about the, what do you say, audit, the MCQ part of the paper, is that in case if it is possible for you, not possible, obviously I want you to prepare for the next subject. After audit you have EIS, right? EIS SM over there. So you prepare for that exam if you are like, one, but if there is like 2.5 day holiday or something, and if it is possible for you, okay, absolutely, if it is possible, don't go out of the way. If it is possible for you and you remember little bit of the MCQs which were asked in the exam, you can just make a list and write a mail to me saying that, ma'am, in November 24 or May 23, these were the MCQs which had come in the paper. Not detailed, but even if you can tell me it came from analytical or it came from audit sampling or automated environment, it would be very nice. If you have a cartel of friends, then you can decide, and then you remember one MCQ for ma'am, I will remember one integrated case study for ma'am, and then the others remember. But then obviously that is something which additionally you might consider, because it will be more beneficial for the further students to whom I teach in the class. I can tell them more about it. Right, so some students have been conveying to me more at the final level regarding what MCQs are coming in the exam. Okay, right, so anyways, we will prepare it all now, no worries about it. So right now we are talking about the chapter of the analytical procedures, right? Analytical procedure. When I see this analysis, I feel like, every mark which we get in the exam is like a result of blood and sweat. You understand, you put so much of effort just to get that, that one question coming from that one chapter, or the two question coming from one chapter, or overall to reach that 40 or 50 also in the exam. It's so much of hard work and dedication and perseverance and persistence, all goody goody words over there, all motivational words over there, right, for getting those required marks in the exam. Okay, right, so everybody, do you have the roadmap in front of you of what we discuss in the chapter of the analytical procedures, all of you? Okay, right. And then after that, again, we have the question bank, right? Question bank, again, all the correct and incorrect over there. And then after that, we have meaning and performing the analytical procedures. Then performing analytical procedures. What did I say? Either you do the comparisons or you check for the relationships. Then again, a practical type of question over there. Then purpose of analytical procedures. Then again, independent verification, substantive analytical procedures. Then look at this question. What is this question? Factors to be considered for substantive audit procedures. Then, oh, this question again I did not mention, it is such a huge chapter, right? So this is again a favorite one for the MCQ. Techniques available as substantive analytical procedures, right? What are the techniques available as the substantive analytical procedures? What are the techniques available? Four techniques we have over there. The trend analysis, right? The trend analysis, then the ratio analysis, then the reasonableness test, and the structural modeling, right? Reasonableness test, right? Reasonableness test, and then you have the structural modeling, right? Structural modeling. So what is that? The factors is the techniques available as the substantive analytical procedures, right? What are the techniques available? Trend analysis, ratio analysis, reasonableness test, and the structural modeling, right? Again, wholesale or retail, again wholesale or the retail question. So techniques available as substantive analytical, 2 times asked in exam, and again once in the RTP they put only regarding the trend analysis. Then once they asked only regarding what are the commonly used ratios, so that's only regarding the ratio analysis. Then what did I say? We have a question regarding the factors to be considered for substantive analytical procedures. In that you have SREM. What is S? Suitability. Then after that you have a retail question on the R, that is reliability, asked 2 times in the exam. Then you have a question regarding the E, that is the expectation, right? Then after that, investigating results of the analytical procedures. Then consideration specific to the public sector entity, and some offbeat question over there. Okay, how do you perform analytical procedures for audit of inventory, or how do you perform analytical procedures for the trade receivable and the loans and advances? And again, this is an interesting questions, so which we'll see it towards the end. Okay, right? So you see, is it enough for you to gain confidence and, cover at least this much of what is there? In addition to this, what you need to do? MCQs. Did I tell you? You prepare a checklist and you prepare a control sheet with you. Okay, MTP, RTP, how many MCQs I'm seeing, say last 5 attempts or so, and plus the ICI booklet of MCQ. So those MCQs you should do. In addition to that, in this book, there are around some, what do you say, I can just show you the chart over there. Not that you need to study from this book, not at all. If you have any other book also, but because I'm showing you from this particular book, right? In this particular book, in this edition at least, there are some 467 correct and incorrect over there, and there are some 619 questions if I take the total chapter wise, right? So that's coming to some 1086 question. How much you will study? And this much also, if you study, more than enough. Right, so you do all these, what you say, correct and questions over there. In addition to that, you do the MCQs of the ICAI, right? I think, and all this you do 3 times before the exam. By the time the day of your exam will also come, because you'll say, ma'am, we don't have one subject audit only. We have 4 subjects in group 2. And of audit only, you're telling us to do so much over there. Okay, right? So everybody, let's begin with the chapter now. Right, the analytical procedures. Right, now talking about the analytical procedures. Okay, right, so one, what does it say? Analytical procedures. What is the meaning? You do evaluation. What are you doing? Evaluation of the financial information. What are you trying to evaluate? Financial information. How? Through analysis of the plausible relationships. Right, plausible relationships. What do you mean by plausible relationship? There should be some link in the data that you are comparing. There should be some association. There should be some cause and effect over there among not only the financial, but you can also make use of the non-financial data, right? And also the non-financial data. So like, say I want to do analytical procedures for, say, some truck manufacturing company. Do you know any truck manufacturing company? Have you seen trucks on the highway? You see? Yes, Ashok Leyland. Do you see the trucks of that particular company? Now we want to see, yes, Bharat Bains also, you see the trucks over there. So now if I want to see how many trucks were manufactured by that company during the year. Now see, generally these companies, they don't manufacture the tires on their own. They purchase it from some JK tire or some MRF or some tire they purchase. Okay, so now I see how many tires did they purchase during the year. Then I see how many types of trucks do they manufacture. You see, some trucks which are there on the highway, they have 20 trucks also. You keep on counting, okay, how many, they have 20 wheels also. You understand? You see, oh my God, four big wheels, and then four small wheels, and then if this side so many wheels, that side also there would be those many wheels. We try to take the total of how many tires would be there in that one particular truck, right? So some trucks, they may require 20 tires, some may require 12. Generally, a truck requires 4 tires, or some could require 8 or so, right? Then we see each of the variety of truck, how many of such trucks have been manufactured. Then do I come to know the total number of tires which they require during the year, and that I compare with the tires which they have, what do you say, purchased during the year from the tire company. So now how have I checked the production of the company? I have checked it by doing the analytical procedures. Or say I want to check the electricity expenditure of a company. So what do? I check the electricity units consumed per month, April to March, electricity units consumed per month. Then do I have the rate per unit? Yes, I multiply the two. I take the gross total. I have checked the electricity expenditure for the year. Are you understanding that? Right. Like, can I compare payroll cost to number of employees? Right, payroll cost, salary expenditure to number of employees. Yes, so now what I'm doing the financial to non-financial data. Can I calculate debtors turnover ratio? Right, so that is financial to financial data. Can I calculate the input output ratio? Right, that is non-financial to non-financial data. Okay, if 10 kg input, 8 kg output. Are you understanding that? So financial as well as it could be the non-financial data. But what is very important, you need to check for the plausible relationship. What is plausible relationship? There has to be a link. Link means what? Like, say for a software company, can I compare number of employees to revenue? For a software company, can I compare number of employees to revenue? Yes, because how many employees, that many project, that much revenue. But for a manufacturing company, can I compare number of employees to revenue? No. For a software company, can I compare number of employees to revenue? Yes. But for a manufacturing company, can I compare number of employees to revenue? No. There I have to compare with number of goods produced or raw material issued for production to the production and then the revenue. Are you understanding? In a BCom paper, can you compare number of pages written to marks obtained? Yes, but for CA exam, can you compare number of pages written to marks obtained? No. Why? Because there is no plausible relationship. Right? Plausible relationship among financial and non-financial data. And generally, you know what we do in analytical? We develop an expectation. So say my expectation rent per month is 1 lakh. So into 12 months, what is my expectation for rent? 12 lakh. I compare it with the actual. Say actual is 12 lakh, super. But say just for an example, what is actual? 14 lakh. So now what is the difference? 2 lakh. This 2 lakh difference, whether auditor should consider or ignore, it depends on the materiality. If materiality is 1 lakh, consider. If materiality is 10 lakh, ignore. Are you understanding that? Right? So develop an expectation, compare with actual, then whatever is the difference. If it is exceeding materiality, then you investigate. If it is not exceeding materiality, then you ignore. Are you understanding? So when you do this evaluation, you may identify an inconsistency. Are you all with me? When you do this evaluation, auditor, you may identify an inconsistency. So what you need to do, if you identify an inconsistency, now auditor, you need to investigate, right? Investigate, identify inconsistency, investigate. Are you getting the triple I over there? What is the 3I over there? Identify inconsistency, then investigate. What investigate? Rent should have been 12 lakh, but actual is 14 lakh. Materiality is 1 lakh. So now I need to investigate. Or I compare with previous year. Last year traveling expenses 70 lakh. This year traveling expenses 8 crore. 8 crore. Crazy. Last year traveling expenses 70 lakh. This year 8 crore. Isn't it crazy? Should the auditor not investigate? Okay, right. So like, just as, without bias to any religion, just giving an example over there, like, it says, no, then, God, Lord Shiva, without bias to any religion, right? Lord Shiva then opens his third eye, right? So your auditor will have to open his third eye. And the auditor will have to investigate, or what is happening last year 70 lakh, this year 8 crore, what is happening in your company? Don't write an exam. So now auditor will have to open his third eye. I'm just giving it to you as an example. And okay, identify inconsistency, then you need to investigate. Investigate means exactly do what? Again, a question asked in your exams. I've already shown it to you in the question back. Investigating results of analytical procedure. So now what you need to do? One more I. What is one more I? Inquiry. Ask management, what happened? Why you are traveling so much? So inquiries of the management, and perform other audit procedures as necessary in the circumstances, right? Perform the other audit procedures as necessary in the circumstances. So what does it say? Identify inconsistency, investigate. So investigate means do what? Make inquiries of the management and obtain appropriate evidence relevant to management responses, and also perform other audit procedures as necessary in the circumstances. Again, a question asked in your exams. Investigating results of the analytical procedures. Are you understanding that, everyone? Right? Investigating results of the analytical procedure. So did you see the definition of analytical procedure? Evaluation of financial information through analysis of the plausible relationship among financial and non-financial data, and identify inconsistency, investigate. And how to investigate? Again, one more I. Inquiry, and then perform the other audit procedures. Clear to everyone? Okay. Then how to perform analytical procedure? They say auditor perform analytical. So how to perform analytical? Either you do the comparisons or you check for the relationship. Comparison, you can compare with the previous year, or you can compare with the budgets, or you can check it with the similar industry information. Right? So compare current year with the previous year, or compare it with the budgets, or compare it with the similar industry information. Like ICICI Bank, can I compare it with HDFC Bank? Yes, right? So similar industry information. Infosys, can I compare it with TCS and Wipro? Yes, right? So that is what you compare it with the prior period, or compare it with the budgets, or you compare it with the similar industry information, or you can check the relationship you can check of the financial information with the non-financial information, or you can develop a predictable pattern, or you can use the various methods like simple comparisons to complex analysis. Right, so what are the three methods of relationship? One, you develop a predictable pattern. What is a predictable pattern? Okay, 2025 and a salary, traveling expense of company 70 lakh. 2024, say it was 68 lakh. 2023, say it was 69 lakh. Okay, now 2026, how much do you expect it to be? And 23, 24, 25. Now how much do you expect it to be in 26? Right, 70 to 75 lakh, like say 60 to 75 lakh, 65 lakh to 75 lakh, in that range. So what am I doing? I'm developing a predictable pattern, and now actual comes to 72. Okay, no problem. Actual comes to 8 crore, big problem. Actual comes to 10,000, again big problem. You understand? So what you do, you develop a predictable pattern, conform to a predictable pattern, or you check the relationship of the financial information with the non-financial information, or you can do the simple comparisons to the complex analysis, like all the ratios which you study in FM, debtor turnover ratio, fixed asset turnover ratio, debt equity ratio, current ratio, quick ratio. It says calculate all those ratios, right? So that is how you perform the analytical procedure. And a term to you use big. Oh, auditor, you should do analytical procedure. And it means exactly what to do. Do two things. Either do the comparison or check for the relationships. Are you understanding that? Okay, right. So it says you can check it with industry data, prior period data, auditor expected result, client expected result, or you can use the non-financial data, right? So that's just an extension of what we discussed above. Okay, right. Then purpose and timing of analytical procedures, right? So purpose of the analytical procedure. Why are we performing analytical procedure? To check whether the data is reasonable. Are you seeing, reading the sentence? Analytical procedures use comparisons and relationship. Did I just discuss with you comparisons and relationship? Right, so they use comparisons and relationship. Why? To assess whether an account balance or other data appear reasonable. So what we want to check, whether sales of the company, traveling expenses of the company, whether they appear reasonable. And for that, what I do the comparisons, or I check for the relationships. Are you able to understand that? Okay, right. So it says you have to establish the relationship that exists between certain balances, right? And this will helpful for you in detecting the unusual state of affairs, right? This will be helpful for you to detecting the unusual state of affairs. So first, what is the important requirement over there? There should be a plausible relationship. If there is no plausible relationship, you can't do analytical procedure. If there is a plausible relationship, then it can help you to detect the unusual state of affairs. Like, GST paid by a company, can I compare it with the revenue of the company? 100% yes. Are you understanding? So what is that? That is again an analytical procedure. You come to know that they have paid GST of such a high amount, but correspondingly revenue is not seen that much. So that means there might be some under recognition of the revenue, or they've paid such less GST, but so much of the revenue of the company they are showing. Right? So again, there might be over recognition, bogus revenue being recorded in the books of account. Right? So what is the first point? It helps you to check whether the account balances are reasonable. Second, it helps you to find out any unusual state of affairs and mistakes in the account. This you can do by doing the inter-firm and the intra-firm comparison. That is doing the comparison within the firm. That is, you compare it with the previous year, you compare it with the budgets, or you can compare it with another entity. That is similar industry information. Right? You can compare it with the previous period, or you can check for certain expense ratio. It's so much of theory, they're not even the points over there. They're like paragraphs given in the study material of ICAI, right? You have the material in front of you, right? So that's the content given over there, right? Then what does it say? Rather than doing inter-firm, intra-firm and checking it certain expense ratio, what you can do, also independently verify the correctness of some of the item. One of the exam, they put this as a retail question over there. Independent verification. How can you do the independent verification? What I told you, quantity of sugar sold by a sugar mill can be verified with the amount of the GST paid. right, with the amount of the GST paid. Again, any item of income or expense which has a direct relationship with the amount of the profit, like say commission paid to a selling agent, right? So what is commission paid? Correspondingly, can you calculate the sales of the company? Yes, to a selling agent as a percentage of the sale, or manager commission paid to manager as calculated on the net profit, right? So this is how you can also independently verify. And again, what is your aim? To identify the existence of unusual transactions or event. What is the other term we set for unusual transaction? What is the other term which we set for unusual transaction? Identify inconsistency. So unusual transaction is nothing but the inconsistency. Unusual transaction is nothing but the inconsistency, right? It is nothing but the inconsistency. Are you able to follow this? So what is this question over there? The purpose of analytical procedure: to check whether the account balances are reasonable, to detect any unusual state of affairs or mistakes in the account. For that, what you can do? Interfirm, intrafirm. Also, you can check for the previous period. Another way, you can independently verify by checking the GST paid with the sugar sold. That's one example over there. Or what you could say is, you can do the commission paid to the agent with the sales of the company, right? And again, this is done why? In order to identify the existence of the unusual transactions and the event. And when analytical procedures are to be followed, I already told you they have to be followed at all stages of the audit, right? So now we have a retail question over there regarding the analytical procedures to be performed at the planning stage of the audit. Again, this question you will also see it in the question bank of SA 315, risk assessment, right? Because these are analytical procedures to be performed at the planning stage of the audit. Okay, now I'm just starting with the audit, and it says no problem. Even though if you're just starting with the audit, even at the planning stage of the audit, you should perform analytical procedure, right? Because say like what I told you example over here, okay, generally this is the traveling expenses of the company, 69, 68, 70 lakh or something, and this year you came for audit and you come to know that the traveling expenses have shooted up to 8 crores. So now you come to know about information of which you were previously unaware. It will help you, assist you in determining the nature, timing and extent of your other audit procedures. Otherwise, normally for traveling, you would have done your regular checking, which you did in 25, 24, 23 also. But this year, now in 26, will you increase your nature, timing and extent of audit procedures for traveling? Yes. So how did you come to know? Why are you increasing? By performing the analytical procedures, you come to know about information which you were previously unaware. This will assist you in determining the nature, timing and extent of the other audit procedure. Other means further audit procedures. Other means further, because risk assessment, after that what comes? Further audit procedure. Then for performing analytical procedures at the risk assessment stage, can you make use only of financial data, or can you also make use of the non-financial data? You can also make use of the non-financial data. Okay, right? So again, a retail question asked in your exams regarding analytical procedures at the planning stage of the audit. You know examiner's eyes? Examiner, the person who you write your paper, then that person is going to check your paper. He's going to read what you have written over there. And what will his eyes be looking for? Previously unaware. Assist in determining nature, timing and extent of other audit procedures, and not only look for the use the financial information but also the non-financial information. Okay, now coming to substantive analytical procedures, right? Substantive analytical procedures, because that substantive procedure, what are the two options you have? Test of detail, analytical procedure, or a combination of both. See that agreeing to underlying record and journal entry is extra. What are the two main procedures over there? Detailed checking or analytical checking, है ना? Whether auditor should do the detailed checking or whether he can do the analytical checking, or whether he should go for a combination of both, or whether auditor should all go for a combination of the both, right? So what is the first question over there? Factors to be considered for substantive audit procedures. Substantive audit procedures given in the chapter of the analytical procedure. Then after that, what we have? The techniques available as substantive analytical. What are the techniques? Trend, ratio, reasonableness test and the structural modeling. Then the factors to be considered for the substantive analytical procedure. And now what are these factors now to be considered while performing the substantive analytical procedures. What are the factors I told you? Suitability, reliability, expectation, and the materiality. Again, for each of them, we have a retail question. The suitability, then the reliability, then the expectation, and then the materiality, right? Expectation and also the materiality. Yes, do you understand everyone? So now what am I going to discuss with you? The factors to be considered for substantive audit procedures. Okay, you say okay, now I have to do substantive checking. Hai na? More of substantive means to substantiate, to check the supporting. So now there is a dilemma in my mind. What is the dilemma in my mind? Whether I should go for detailed or whether I should go for analytical. For that, first what I need to check, what is the data which is available with me, right? What is the data which is available with me, right? So the availability of the data, then whatever data is available, to what extent I can do the disaggregation of the data, like disaggregation of the data, like rent per month 1 lakh, so for the year 12 lakh, or I say electricity units consumed per month into the rate per unit, can I get the electricity expenditure? Yes, but like this, can I develop an expectation for traveling? The way I develop an expectation for rent or electricity or royalty or something, on that line, can I develop an expectation for traveling expense? No, it's very ad hoc. So can I do the disaggregation of the data, breaking of the data for rent, electricity? Yes, but can I do the disaggregation for traveling? No. So it depends on the availability of the data. So you say data is available. Now next you need to check whether you can cut the data. Cut the data means disaggregate the data. Then also what does it say? Analytical will be more useful for certain types of account. Like what example I gave you, for rent, electricity, it will be more useful than for the traveling expenses, right? Then for the traveling expenses, right? Obviously transactions which are more predictable, it is good to use the analytical procedure. So income statement captions are more predictable as compared to the balance sheet captions, right? So data, availability of the data, disaggregation of the available data, then what is the account time, then whether the data is tend to be more predictable or whether it is the non-routine or estimation SCOT. What is SCOT? Significant classes of transaction. So if it is predictable, then I can go for analytical, but if it is non-routine, not to go for the analytical. Then whether it is predictable, that can you predict how much will be the sales of the company, how much should be the cost of sale or the trade receivables and the cash receipt. So is it predictable? Because what did I say, how I perform analytical procedure? We develop an expectation, we compare with actual, and if there is a difference which is material, we investigate. So now what you need to check, whether it is predictable. So you say no, it is not at all predictable, it is not at all predictable. Okay, what is the impact of COVID on sales? Not predictable, right? So whether it is predictable or not predictable. Next, it depends upon the assertion. What is the assertion? ERCV or the OCACC, right? So what does it say? For checking, it may be more effective for checking the completeness or the valuation than for checking the rights and obligation. How I can check rights and obligation by performing analytical? No. Can I check completeness by performing analytical? Yes. But can I check the ownership by performing analytical? No. So it depends on the nature of the assertion, and it depends on the inherent risk or the WCGW. What is WCGW? The what can go wrong. So obviously more the WCGW, more the detailed or analytical. More the what can go wrong, the higher the inherent risk. What will you prefer, detailed or analytical? You will prefer the detailed checking. Okay, right. So that's all the factors to be considered for substantive audit procedures. What are the factors? Availability of the data, cutting of the data, then the account type, then the source, then the predictability, the nature of assertion, and the WCGW. Are you getting this one over here? Right. So substantive audit procedures, what does it say? Right, substantive audit procedure, 3 marks, November 2020. And what question they ask? Analytical procedure, explain the following factors to be considered by the auditor for substantive audit procedure: account type, predictability, and the nature of the assertion. And so specific heading as per the study material of ICAI, they've given over there and asked the question. Right, account by type, the predictability, and the nature of the assertion. Do you understand everyone? Okay, then what are the techniques available? Trend analysis, ratio analysis, then the reasonableness test, and the structural modeling. In trend analysis, we compare with the prior periods. In trend analysis, we compare with the prior periods. In ratio analysis, we check the income, expense, and the asset liability, the relationship between income expense accounts and the asset liability account, like debtors turnover ratio, fixed assets turnover ratio, debt equity ratio, or so. Reasonableness test, again you compare, but now you compare with the non-financial information. In trend analysis, I compare it with the previous year, whereas in reasonableness test I compare it with the non-financial information. And structural modeling, based on the past data, I try to predict the current account balances. I try to predict the current account balances. Okay, predict the current account balances. So on the basis of the past, you try to predict the current balance. That means what? Again, same. You develop an expectation, right? You develop an expectation. So that's the structural modeling, right? So trend analysis, it is the comparison of the current data with the prior period balance, or with trend of one or two more prior period balances, right? Then what is the next one over there? Ratio analysis, analyzing asset liability as well as the revenue expense account, right? Asset liability or the revenue expense account, like trade receivable, inventory turnover, freight expense as a percentage of the sales revenue, right? Then reasonableness test, in trend analysis you compare it with the prior period, but here you compare it with the non-financial data, right? Here you compare it with the non-financial data. And what is structural modeling? Based on the financial, non-financial data of the prior accounting period, you try to predict the current account balances. If last year so much was the traveling, how much will be the traveling for this year? You develop an expectation, you try to predict the current account balances, right? You try to predict the current account balances. Is it clear to everyone? What are the techniques available? What are the techniques? Trend analysis, ratio analysis, reasonableness test, and then you have the structural modeling. And then what is the next question? Factors to be considered while performing the substantive analytical procedures. And what are the factors? Suitability, reliability, expectation, and the materiality. Okay. If risk is high, what is more suitable, detailed or analytical? If risk of material misstatement is high, what is more suitable, detailed or analytical? Detailed. If controls are effective, what is more suitable, detailed or analytical? If controls are effective, what is more suitable, detailed or analytical? Analytical. So that's the suitability, right? That's the suitability. Then it depends on the RMM and the test of details, if any. Right. Next one, the reliability of the data. What did we say? How to perform analytical procedure? You compare it with the previous year, you compare it with the budgets, you compare with similar industry information, or you check the relationship with the non-financial data. So what you say, ma'am, I want to compare it with similar industry information. So obviously for that, will I require the industry information? Yes. And also you say, no, ma'am, I want to compare it with the prior period. Will I require prior period data? Yes. You say, I want to compare it with the budgets. Will I require the budgets of the company? Yes. And say this data is not reliable. Does it make any sense to compare with this data? Does it make, you say industry data is available, but it's not reliable. Should you do analytical? No use, right? So reliability of the data to be used for performing analytical procedure, right? The reliability of the data. We need to look into the source of the data. From where did you get this industry information? Comparability. Like I told you, ICICI Bank, can I compare with HDFC? Yes, but ICICI Bank, should I compare it with Tata Motors? You say, ma'am, why you want to compare these two? And so the comparability. Next one, the nature and the relevance of the information and the controls over the preparation. Like nature, can I compare the NPA of one bank with the NPA of another bank? Yes. And NPAs of two banks, can I compare it over there? Nature of information available? Yes. But can I compare the NPA of one bank with the bad debts of Infosys? No, then that's not comparable at all. Are you getting? And also the controls over the preparation. Like if the company is preparing the budgets, what controls they have over the preparation of the budget, right? So that's the reliability of the data. Then expectation. Auditor, are you able to develop an expectation to sufficiently precise to identify a misstatement? So are you saying, okay, yes, I think that the traveling expenditure of the company should be 12 lakh. So are you able to develop an expectation which is sufficiently precise to identify a misstatement? You say कि yes, if rent is anything more or less than 12 lakh, it is going to be a misstatement, because according to me, my expectation is sufficiently precise to identify a misstatement. Are you getting the wordings over there? Right. And last one, say actual is 14 lakh, difference is 2 lakh. So what is this? This is difference between the expected value and the actual value, whether to consider or ignore. It depends on the materiality, right? So the difference between expected value and actual value, that is recorded amount, that is acceptable without further investigation. So that is nothing but the materiality. That is why, though that word is not there over there, materiality, but I say it as materiality. What does it say? Determine the amount of any difference of recorded amount from expected value that is acceptable without further investigation. That means nothing but materiality. Simple, na? Right? So suitability, reliability, expectation, and the materiality. Reliability of data, 2 times question asked in your exam. What is reliability of data? SNCC. What is SNCC? Source, nature, controls, and the comparability. And you have one more point over there regarding the OE, the operating effectiveness of the control. So controls over the preparation and also the operating effectiveness of the control. Half of your problems in life, will get solved, or more soon you will become a CA final student if you are able to identify what is the question coming in the exam. Right? Please work on that. Only knowing all this content, not enough. What am I trying to convey to you right now? Okay, this is the different questions which are coming in the exam. So now reliability of the data to be used for performing the substantive analytical procedure, right? What is the first one over there? The suitability, right? What is it suitable for? For large volume of transactions or for the smaller volume of transaction? Obviously for the large volume of transaction which tend to be predictable over a period of time. Again asked in the correct, incorrect. Right? Whether substantive analytical procedure should be performed for the large volume of transactions which tend to be predictable over a period of time. Then the substantive analytical procedures are generally less applicable to large volume of transactions that tend to be predictable over a period of time, not less, more. And the substantive analytical procedures are more applicable to large volume of transactions that tend to be predictable over time. Are you getting that point? Right. So then all these, only the points have been put over there based on the questions in the flow of the chapter. Right. So one, what does it say? For large volume of the transaction, then obviously relationship among the data should exist. Right. So expectation that relationship among data exists. That means the sales of the company are affected by the number of goods sold. Right? So there has to be a plausible relationship. Did we see that in the definition of analytical only? There has to be a cause and effect. One has to affect the other. Or you're saying, no, ma'am, I'm comparing the traveling expenses of the company with the rent paid by the company during the year. Now, why would you compare these two, traveling expense with rent expense? Doesn't make sense. Right? So there has to be a relationship among the data. So one, it should be predictable. Second, there should be a relationship among the data. Then third, what does it say? Suitability will depend on how effective it will be in detecting a misstatement. How effective it will be in detecting a misstatement. Okay, whether by performing this analytical will you be able to detect a misstatement. If not, then why perform analytical? It's not suitable. If not, then it is not suitable. Then what does it say? It's not something high-tech always. It could be even an unsophisticated predictive model may be effective as an analytical procedure. That is what I saw, that fixed assets of the company as compared to the previous year have increased by 10%. Okay, if last year company had fixed assets of 100 crore, this year they have fixed assets of 110 crore. My simple expectation that depreciation should have also increased by 10%. Simple. Company has taken no new loans during the year. My simple expectation that interest expenditure should also increase during the year. No great science and knowledge required over there. This is basic logic. You understand? It's even an unsophisticated predictive model may be effective as an analytical procedure. Right? So some transactions, they tend to be predictable. Then you need to check whether relationship among data exists. Then whether that analytical will help you to identify or detect a misstatement. Then not necessarily it has to be high tech. Even a sophisticated, unsophisticated predictive model can be used. Then also, what does it say? Different types of analytical give different levels of assurance. Like, if I'm predicting the total rental income, that can be done with more accuracy as compared to calculating the gross margin percentages. right? So less persuasive evidence you can get over there, right? But rental income, can I calculate it more accurately, expect to develop the expectation more accurately? Yes. Then it also depends upon the assertion, right? Assertion, again, the ERCV and so it depends on the assertion and the RMM. Right, so what did we say? Analytical could be good for doing checking completeness, but not good for checking the rights and obligation, right? And then again the test of detail, right? Whether you're also going to perform any test of detail for the same assertion. Okay, are you only going to rely on the substantive analytical procedure, right? So what is that? The factors to be considered for the suitability of the substantive analytical procedure. Then reliability. What are the points for reliability? Source, nature, control, comparability, and the operating effectiveness of control. Then you have the point regarding the expectation, and then last point over there is regarding the materiality, right? Then we already discussed regarding the investigating the results of analytical procedure. Then analytical procedures while forming an overall conclusion. Yes, you want to corroborate your conclusion, right? So whatever I have concluded by doing my entire audit, and whatever now I come to know by performing analytical procedures near the end of the audit, whether these two are tallying, right? So whatever is my, yes, auditor's understanding of the entity based on the audit, and whatever is now the conclusion of the auditor regarding the audit, whether these two are consistent, is why auditor performs analytical procedures near the end of the audit, is why auditor performs analytical procedures near the end of the audit. Okay, what I have understood and what I am concluding, are these two consistent? Am I able to corroborate? Am I able to corroborate? Like I just gave you an example. Okay, fixed assets have increased, correspondingly whether depreciation has increased. If in loans have increased, whether correspondingly interest expenditure has increased. So whatever is my understanding and whatever is my conclusion, whether these two are consistent or whether there is any unrecognized risk of material misstatement, right? Any unrecognized risk of material misstatement. And then you have the consideration specific to the public sector entity. What are the consideration? As now everywhere you have to compare it with the private sector. It says in a private sector you make a distinction between capital and revenue expenditure, but in a public sector you may not make a distinguish between the capital and the revenue expenditure, right? In many public sector entities there is little direct relationship between the revenue and the expense. And what does it say? Acquisition of asset may not be capitalized, right? So in a private sector entity, will I think I'm doing so much expense, then what income I will get? Yes. But government, will it think we are spending so much of money for the COVID vaccination, what income we will get out of that? No, they will not think of that way. So there is no association between the income and the expense. Then another problem is what? Acquisition of assets may not be capitalized, it may be charged to the revenue account. And what is one of the way to do analytical? To compare it with the industry. But for public sector, industry data may not be available. For public sector, industry data may not be available. Industry statistics or data may not be available in the public sector. It may not be available. So these are the challenges for performing analytical procedures for public sector entity. What are the challenges? There may be no direct relationship between income expense. Then capital expenses may not be capitalized. They may be charged to the revenue account, and industry data may not be available. Are you getting that? Okay, right? So that completes our chapter for the analytical procedures, right? So when you're doing the class, or those students who are listening to me in the video lectures or so, right, it's your utmost priority. Okay, no lunch, no phone, no Instagram. That to anyway should not be there for you, right? None of these till the time I study this chapter entirely on my own, 3 times or so, because now I at least know an outline of the chapter, right? I also do the practice of writing few of the answers over there and then proceed further. Otherwise, everything you keep it like that, hanging over there and loose ends over there, then again the date of the exam comes and then you are not well prepared for the exam, right? Like, when you go to the gym or so, they work on the fitness, no? They work on developing the, what do you say, their biceps or their muscles over there, the toning, and they also have to take the proteins and all of that along with it, a particular diet. So this is maybe not physical, fitness over here, but we are talking about the audit fitness over there, like preparing well for the subject of the audit for the exam. right? So you have to be regular. You see, you go to the gym for 4 days, and then if you don't go again, then all effort goes into waste over there, right? You have to be very consistent with your practice for whichever form. Like, why only gym? Even though if you are a badminton player, or you are a tennis player, or you are a chess player, you have to have the consistent practice over there, right? So, and you need to have the super specialization, right? So over here also, that type of specialization, gain it for every chapter. Do the best of your effort for the chapter. I'm telling you, it will be difficult for you to fail in the exam. You say, ma'am, what more do we want than that, making it difficult for us to fail in the exam. Okay, right, coming to the next chapter over there, which is regarding the audit sampling. Are you all with me? Right, so now coming to the next chapter for our discussion, which is regarding the audit sampling. Okay. Right. So now what is the next chapter which we have for our discussion over there is regarding the audit sampling, right? So now in audit sampling, first in this chapter, there are a lot of definitions being discussed. Like, definition of tolerable misstatement, tolerable rate of deviation, population. Then you also have the sampling risk, non-sampling risk, right? So a lot of important definitions first discussed in the chapter of the audit sampling, right? So audit sampling essay 530, which is regarding the audit sampling. Right, so one, you have a lot of definitions in this chapter regarding the audit sampling. Some of the important definitions over there are regarding the sampling risk, right? Sampling risk is a very important definition over there. Right, then another, obviously sample I select from the population. Sample we select from the population. So another question which we have in the beginning of this chapter is regarding the characteristics of the population, because only if my population is proper, from them I can select the correct sample. If the population is only not proper, how can I select the correct samples? Right, so the characteristics of the population. Then super favorite question from this chapter is regarding the approaches to sampling. And what could be the two approaches to sampling? It could be the statistical sampling approach, or it could be the non-statistical sampling approach. Non-statistical is nothing but your judgmental sampling, based on the personal bias and judgment of the auditor, right? Personal experience and the judgment of the auditor. So you have the approaches to sampling. Then again, an important question from this chapter is regarding the sample selection methods, and we have the 5 methods over here for the selection of the sample. What are the 5 methods? Random selection, systematic sampling or the interval sampling, right? Then you have the monetary unit sampling, which is also referred to as the value weighted selection, right? Which is also referred to as the value weighted selection. Then you have the haphazard sampling, haphazard selection, and the block selection, right? The haphazard selection, and then you also have the block selection, right? The block selection. So what are these? These are the sample selection methods: random, systematic, monetary unit, haphazard, and the block selection, right? Then again, an important discussion over here is regarding the sample design, right? Sample design, then the sample size, and also evaluation is sample size, and then also evaluation of the items, right? And the evaluation. So sample design, sample size, and the evaluation. And a sample design, sample size, and the evaluation. In statistical sampling, one more question which we have over there, super favorite of ICAI, is the advantages of the statistical sampling. Advantages of the statistical sampling. Then factors which will increase, decrease, which might increase or decrease your sample size. Sample size means sample, what do you say, number of samples. Sample size for TOC and TOD. What is TOC? Test of control, and TOD, test of detail. So what does that mean? Extent, and a nature, timing, and extent. Extent means what? Sample size. So factors which will influence your sample size, which will increase or decrease your sample size for TOC or the TOD, right? TOC and TOD. And then very important, interesting part of the discussion, which is evaluating the results of the audit sample. Okay, in my sample I found out a misstatement. Then obviously what I need to do, I need to project that misstatement to the entire population. So evaluating the results of the audit sample. Evaluating the results of the audit sample. That is, you need to project those misstatements to the entire population, right? So that is again one more dimension of our this discussion in this chapter, right? So this is the outline of the chapter of the audit sampling. In the MCQs also, are they asking lot of questions from the audit sampling? Yes. Right. So one, what we need to discuss a few definitions over there. Then after that, the characteristics of the population, right? ACR, appropriateness, completeness, and the reliable, right? Then the approaches to the sampling, right? What are the two approaches? The statistical and the non-statistical. Then you also have the sample selection methods, random selection, systematic selection, monetary unit or the value weighted selection, haphazard selection, and the block selection. Then you have the sample design, sample size, and the evaluation. Then the advantages of the statistical sampling, factors which will increase, decrease your sample size for TOC, TOD, and then evaluating the results of the audit sampling. Okay, right. So if I look at the question bank, again, as usual, we have so many of the correct and correct over there, right? So huge number of correct and correct rather over here. And then after that we have, okay, why audit sampling? And okay, why the audit sampling should be done and why not to go for 100% of the checking? The approach to audit and extent of checking are undergoing a progressive change in favor of the attention towards the question of principles and control with a curtailment. Curtailment means reduction of the non-consequential routine checking. Discuss the above statement. Or there is a growing realization that the traditional approach to audit is economically wasteful because all efforts are directed to check all transactions without exception. So it says no need to check all transactions with this. What you can do is the audit sampling. Right? So it says no conscious effort in human society is divested for economic considerations. So obviously every effort you put, there is some cost involved in it. Right? An audit is no exception. If I'm going to check all transactions, will it involve some cost and effort? If I'm going to check all transaction, will it involve effort and cost? Yes. So there is a growing realization that all this is economically wasteful, right? What does it say? This invariably leads to more emphasis on the routine checking, which often is not necessary in view of the time and cost involved. And why it is not necessary? With a view, with a shift in the favor of the formal internal control, right? So like, if I check, like I told you, revenue recognition of Airtel, if I want to check the revenue of Airtel, even though if I check 1 lakh transaction, doesn't make any sense. What is makes more sense over there? I check the internal control, the controls which they have over the recognition of revenue. I check the automated control. Right? Is that more effective also? Is that more logical and correct also? Like, you are sitting and checking over there the total. No, totals are taken by Excel. How can Excel make a mistake unless and until there is a virus in your laptop? And so unnecessary, you are just doing some, what do you say, traditional routine mechanical type of a work which actually doesn't make any sense. And still time is involved, cost is involved, effort is involved in doing the same. Right? Are you understanding that point? Like, auditor is checking whether brought forward is done correctly. Brought forward will be correct only. Why it will be correct only? Because it is done directly. Tally directly takes the data, and a tally would directly take the data, right? So internal controls in the management, the possibility of routine errors and frauds will be greatly diminished, and auditors often find that extensive routine checking is nothing more than a ritual. Arey, kya mast likha hai? So wonderfully they write over there. It's nothing like, just a ritual or performing some puja or some devotional ceremony over there, because it seldom reveals anything which is material. So it says you get nothing out of that. Now the approach to audit and the extent of checking are undergoing a progressive change in favor of the more attention towards the questions of principles and control. That was given in the question only, with a curtailment of the non-consequential checking. By routine checking, we traditionally think of extensive checking and vouching of all the entries. Right, so that's the variety of the question which has come in the variety of the question which has come in the exam. Okay, so this where it is there in the study material, you're seeing from the study material. Can you tell us where it is given? 7.2 in the beginning of the chapter, in the introductory part over there. So now what could be a question in the exam? Even an introductory para of the chapter could be a question. Right, so anyways, when I prepare the book, I keep the study material in front of me. So obviously that is why you see it in the content of the book also. How can I not have in the book what is there in the study material, right? Obviously we've made an effort to put all what is there in the study material over here. But look at it now, we think introduction. Who reads introduction? You have to read the introduction also, because that also could be a question in the exam, right? Then there are the questions asked regarding the definition, then the desired level of assurance and the stratification, then what I told you, sample size, sample design and selection of the items, right? Then again the stratification and the value weighted selection, right? Stratification and the value weighted selection. Now so many times, 3 times question has come in the exam regarding the sampling risk, right? So 3 times question in the exam regarding the sampling risk. Then after that you have the approaches to sampling, right? Sample selection methods and the advantages of statistical sampling, all put together they are asking for 3 marks. And sometimes they'll ask one small thing for 3 marks, and sometimes so much also asked for 3 marks. Then advantages of statistical sampling, right? 4 times asked in your exams, right? Then again, statistical sampling is more scientific, again widely followed. Then extent of checking on a sampling plan, right? Then also factors influencing sample size. Then all this random, simple, random, stratified, haphazard, and the block selection, right? And then you have the block selection, and then projecting the misstatements and evaluating the result. Okay, you didn't remind me, and even I forgot. Okay, analytical procedures. I told you towards the end of the chapter I want to discuss this question of Aman with you. And then the last question in that chapter, right? So what was the last question? Aman, not Aman, Amar. Amar wants to verify the payments made by XYZ on account of a building rent during 2021. The rent amount paid is 50,000 per month for the year. Monthly rent payments are consistent with the rent agreement. So now auditor, how did he check the rent? He checked it from the rent agreement. But this auditor was very smart. What he did, if this is the office of the client which is taken on rent, he went to the next door office over there and asked them how much rent you pay. You know, because office is in the same premises. So he asked them how much rent you pay. So from that data, he come to know that similar industry is paying only a rent of 10,000, right, per month for a similar location. How will applying analytical procedures impact the verification process of such rental payment? Because if I check it from the rent agreement, it is absolutely fine because it's 50,000. But when I compare it with the similar industry information, then I get some outcome out of the analytical procedure, right? This is like a study material question over there, right? So if Amar in detail checks in detail the monthly rent payment, he may find that payments are consistent with the rent agreement, as the same is getting reflected in the rent agreement. CA Amar may not be able to find out the inconsistency. You remember, identify inconsistency, investigate, right? So your Amar may not be able to find out the inconsistency in rent payment with respect to the rent payment prevalent in the similar industry for rent for similar location. If CA Amar applies the analytical procedures, that is compares the rent payment of XYZ with similar payments being made by companies in the similar industry and similar area, he will notice an inconsistency in such rent payment, right? So other companies are paying a very less monthly rent in similar industry for similar area. However, if CA Amar does not make such a comparison and only checks the monthly payment and rent agreement, he would have not found out the inconsistency, and the misstatement may have remained undetected, right? And the misstatement may have remained undetected. Is it a good question over there? Right, nice question over there. Okay, right. And now coming to the discussion of the audit sampling, right? So audit sampling, when you apply your audit procedures to less than 100% of the items within the population, right? So one option what is there with the auditor, he can select the samples from the entire population. So population is 100 and from that I select the 10 sample. That is one way. Second, what I can do, I can subdivide the population. Like say I can divide the debtors of the company less than 1 lakh, between 1 lakh to 10 lakh, and more than 10 lakh, or revenue of the company. I do the subdivision of the population. And now what is the how many subdivided populations I have now? 3 subdivided population. Each of the subdivided population is called as a sampling unit, and the process of subdivision of the population is called as the stratification. The process of subdividing the population is called as the stratification, and each of the subdivided population is called as the sampling unit. And now what I will do, I will select 2 samples, 4 samples, and 4 samples. So ultimately, did I still select 10 samples only? Yes, but instead of selecting the entire 10 samples from the entire population, first I subdivided the population into smaller group of sampling unit, and then from them I selected the sample. So that is the stratification, and the subdivided population is called as the sampling unit. If I don't divide the population, then the entire population is one sampling unit. If I don't do the subdivision of the population, then the entire population is one sampling unit. Do you understand that? And what is stratification? The process of subdivision of the population into smaller group of sampling units is known as the stratification. Okay, right. Then you have this sampling risk, right? Say population is 100, auditor selected 10 samples. Population is 100, example, auditor selected 10 samples. In 10 samples, say there was zero error. Auditor checked those 10 sample. In those 10 sample, zero error. So what conclusion auditor will reach regarding 100 also? That 100 also there are zero errors. But you know, had the auditor checked the remaining 90, there were 23 more errors. Maybe. Had he checked the remaining, or had he checked all, because 10 to is already checked. Now if he checks the remaining 90, so if he checks all, then how many errors were there? 23. So what conclusion auditor should have reached? That in 100 there are 23. But because of the sample, what conclusion auditor has reached? That in 100 there are zero errors. So what is this? The auditor is reaching an erroneous conclusion, wrong conclusion. The sample is not representing the population. The sample is not representing the population. That is sampling risk. That is sampling risk. Are you understanding that? It can go the other way around also. What does it mean? Population is 100. Auditor selected 10 sample. In 10 sample, there were 4 error. Right? So in 100, please don't say 40. You don't cross multiply. You don't do extrapolation. You do projection by a statistical method. Now, what is that statistical method? Not in our syllabus. But say it comes to 70. So based on sample, what conclusion auditor reach? That in 100 there are 17 errors. But you know, had he checked the remaining 90, there was only one more error. So what conclusion auditor should have reached? That in 100 there are 5 errors. But what happened? Again, based on the sample, the auditor has reached the erroneous conclusion. The auditor has reached the wrong conclusion, right? The auditor has reached the erroneous conclusion, wrong conclusion. What is the definition of sampling risk? The conclusion which the auditor reaches by checking the sample, and the conclusion which the auditor would have reached had he checked the entire population. The possibility that these two conclusions could be different is sampling risk. The conclusion which the auditor reaches by checking the sample, and the conclusion the auditor would have reached had he checked the entire population. The possibility that these two conclusions could be different is sampling risk. Simple language, sample is not representing the population. And a sample is not representing the population. Do you understand that? Okay, right. Now, because they've asked a separate question in the exam, I'll just discuss it little bit further. Please pay attention. Everything in life is not a cakewalk. Sometimes you always have to make a conscious effort also to understand. Where there is sampling risk, whenever I select sample, there is sampling risk. So when I do TOC, there is sampling risk. When I do TOD, there is a sampling risk. And in both cases, what is the risk? That auditor might reach an erroneous conclusion. Right. What erroneous conclusion the auditor may reach? Ke controls are not effective. What erroneous conclusion auditor may reach for TOC? That controls are not effective. What is the reality? They are effective, but based on sample, auditor is reaching the wrong conclusion ke controls are not effective. Or the erroneous conclusion he may reach based on sample is that controls are effective. What is the reality? They are not effective. Right. For TOD, what erroneous conclusion auditor may reach? Ke misstatement exists. What is the reality? Misstatement does not exist. Or he may reach an erroneous conclusion that misstatement does not exist. What is the reality? Misstatement exists. So these are the erroneous conclusion. These are the wrong conclusion. Two wrong conclusions for TOC and two wrong conclusions for TOD. Do you understand that? This is the wrong conclusion. My sample is not representing the population. Now here what happened based on the sample? What did I say? Misstatement does not exist. Here what based on sample, what I'm saying? Misstatement exists. Is it wrong conclusion? Yes. So same thing I'm telling you for TOC also. Right? So controls are effective, controls are ineffective. Okay. Auditor says, oh, controls are not effective. I will increase the nature, timing and extent of the substantive audit procedure. So without the need be, the auditor will end up doing the additional work. Or auditor reaches an erroneous conclusion that controls are effective. So he will do the less checking, and maybe here it does not detect a misstatement. So it might lead to an inappropriate audit opinion. It might lead to an inappropriate audit opinion. Right. In case of test of detail, auditor reaches an erroneous conclusion that misstatement exists. So he says, oh my God, there is a misstatement. I need to do more checking. So again, what does he do? Without the need be, he ends up doing the additional work. And your misstatement does not exist. He says there is no misstatement. Everything is true and fair. So obviously it might lead to an inappropriate audit opinion. It might lead to an inappropriate audit opinion. Right, so there are two hazards or there are two outcomes of sampling risk. One, without the need be, you end up doing the additional work or your opinion may go wrong. It may lead to an inappropriate audit opinion. So without the need be, if I end up doing additional work, obviously it affects the efficiency of my audit. Unnecessarily I'm doing donkey work, extra work. It affects the efficiency of my audit, and my opinion goes wrong, my opinion might go wrong. So that means it affects the effectiveness of my audit. That means I'm not doing the audit effectively. When will you say my audit is effective? When I express the correct audit opinion, and here there is a risk that my opinion might go wrong. There might be an inappropriate audit opinion, right? So this is the entire story regarding the sampling risk. Are you understanding that? One, it might affect the efficiency of the audit or it might affect the effectiveness of the audit. If without the need be I end up doing the additional work, that means it's affecting the efficiency, and if my opinion goes wrong, that means it's affecting the effectiveness of the audit, right? So that is the entire story, and it affects the effectiveness, efficiency of the audit, and so right. So that is the sampling risk. Does everybody understand? The risk that the auditor's conclusion based on a sample may be different from the conclusion if the entire population was subjected to the same audit procedure, right? That is sampling risk. Okay, if the conclusion of the auditor goes wrong due to the sample, then that is sampling risk. If the conclusion of the auditor goes wrong for any reason other than sample, then that is non-sampling risk. What happens? Okay, sample was right. I applied the wrong audit procedure. Then what is the mistake of the sample? I applied the wrong audit procedure. I misinterpreted the audit evidence. That is why the conclusion goes wrong. Now, is it the mistake of the sample? You understand? No. So that is what the non-sampling risk. I was not alert in the audit. I did not maintain an attitude of professional skepticism. That is why my conclusion went wrong. Then why blame it on the sample? Is it the sample? No, it is the non-sampling risk, right? So conclusion of the auditor goes wrong for any reason other than the not related to sampling risk. That is non-sampling risk. No, the risk that the auditor reaches here also, what you are reaching is the erroneous conclusion, but now not due to the sample, for any reason not related to sample. That is the non-sampling risk. What are the examples of that? Human mistake. You say, no, I didn't see it properly, or misinterpreting the sample result, or applying audit procedure which is not appropriate, or relying on erroneous information. And obviously non-sampling risk can never be mathematically measured, right? So could this be also a separate question in your exams? Yes, regarding the non-sampling risk. Everybody, are you able to understand sampling risk, non-sampling risk? Okay, right? Then what are the characteristics of the population ACR? They made a, what do you say, MCQ on this one. Okay, which of the following is not a characteristics of the population? Appropriateness, completeness, reliable, and the integrity. Because we have just studied it, you know, okay, integrity is not a characteristic. What are the characteristics? It has to be appropriate, it has to be complete, and it has to be reliable. Like, you know, if I want to select sample for debtor, what would be the appropriate population in that case? If I want to select the sample for debtor, what could be the appropriate population in that case? List of debtor. So like I want to select sample for debtor and client is giving me date list of fixed assets. It is not appropriate. Right, then one, it should be appropriate, related for the specific objective for which I want to select the sample. Then it should be complete. Now if I want to select the sample for debtor, should they give me the debtors of the entire year, all the debtors, or only little bit of the debtor is also okay? No, it should be complete. And third, also what it should be reliable, right? It should be sufficiently complete and accurate. Right? If the data is not reliable, doesn't make sense at selecting any sample from that data. Right? So what are the characteristics of the population? ACR. Right? So again, if it comes in the MCQ, knowledge is power. Why knowledge is power? Because you have to know these are the three characteristics of the population. It should be appropriate, it should be complete, and it should be reliable. Right? It should be appropriate. Then after appropriate, but it also should be complete. And after being complete, it should also be reliable. Okay. Right? That's the characteristics of the population. And then coming to the approaches to sampling. What are the two approaches? Statistical and the non-statistical. And I'm telling you, oh my God, they love to ask questions from this area. Correct, incorrect, MCQ, theory part of the paper. Super favorite of ICAI from the chapter of the audit sampling. What is it? The approaches to sampling. What are the approaches? Statistical and the non-statistical. When would you say that I'm doing statistical sampling? One, when it is based on the random selection of the sample units. Two, when it used the probability theory to evaluate sample result. And three, including the measurement of the sampling risk characteristics. These are the three features in the definition given of statistical sampling. One, use of random selection of the sample units, then the use of probability theory to evaluate sample result. That means if in 10 there are 3 errors, 100 how many? And to evaluate sample result, you make the use of the probability theory. Like, you know, in your foundation, you would have done no red ball, green ball, yellow ball. Then what is the possibility of a red ball coming out? And something like that. So use of probability theory to evaluate the sample result, including the measurement of the sampling risk characteristics. Please, everybody, read the definition with me. Statistical sampling is an approach to sampling that has the random selection of the sample units, then the use of probability theory to evaluate the sample result, including the measurement of the sampling risk characteristics. Right? Read once again, what is the definition of statistical sampling? It is the approach to sampling that has the random selection of the sample units, use of probability theory to evaluate the sample result, including the measurement of the sampling risk characteristics. Right? You have to learn this by heart. Right? Statistical sampling. Then obviously statistical sampling is more scientific, as it is entirely, right, what does it say? Done through this approach is more scientific than testing which is done by auditors' own judgment. Right? Because it involves the mathematical laws of the probability. Right? So obviously selecting on your own judgment or using statistical sampling, which is going to be more scientific, doing the statistical sampling is going to be more scientific. Then it says statistical sampling has a wide range of application where you have to check a large number of the similar items. Today we saw that in analytical also. Okay, when you want to check a large number of transactions which are predictable over a period of time, you should use analytical. So here also, what does it say? Wide range of application for checking the large number of the similar items. What is the beauty of statistical sampling? No personal bias of the auditor is there in case of the statistical sampling. And again, what does it say? In case of huge transactions, statistical sampling is always recommended as it is unbiased and the samples are not prejudged. Right? So this is all praising statistical sampling over there. Okay, statistical sampling more scientific in nature. Are you getting the point over there? Then we have the advantages of statistical sampling. Right? What are the advantages of statistical sampling? One, it is objective. Right? Sample selection is more objective. Right? Then also, what does it say? It is does not, no, like when population was 100, auditor selected 10 sample in statistical sampling. Now when population becomes 200, how many samples auditor will select in statistical sampling? 10 only, right? So sample size does not increase with the increase in the size of the population. You know, last time when you went for blood check or no blood test, right, that time your weight was 40 kg. How much blood of yours they took? Say 5 ml or 2 ml or something. Now your weight has become 80 kg. You've become double. And studying, your weight has become double. Now this time when you go for blood check, will they take 10 ml of your blood? No, they will still take 5 ml also. The 5 ml only. Do they, you know, say, let me see how much your weight is, accordingly I will decide how much blood of yours is to be taken? No, it says 5 ml, then whatever be, then you become 150 kg also, no problem. Blood how much? 5 ml only. So sample size does not increase with the increase in the size of the population. What they say, once we have our sample representative of the entire population, then doesn't matter what your population is or how much your population increases. Right? That's the advantage of statistical sampling. Are you getting that? One, it is objective. Second, sample size does not increase with the increase in the size of the universe. Universe means what? Population. Then what does it say? It's again a method by which you can give the minimum sample size. So that's what I said now, whether your weight is 150, 80 or whatever. What is minimum sample size? 5 ml. So similarly for auditor, what it is? 10 sample. Right, so minimum sample size. Then obviously when you're using such a method that you want so much of the sample size, you're only taking the calculated risk. Right, because you're working on the theory of the probability. Obviously a very effective method for checking a large mass of data, and obviously it is more scientific and without any personal bias. Obviously you will do the writing practice. 4 times question has come in the exam regarding the advantages of statistical sampling. What is the advantages? One, objective, right? Then sample size does not increase with the increase in the size of the population or the universe or area. Then what does it say? Minimum sample size. That means you're only taking the calculated risk, and it is scientific without any personal bias of the auditor, right? So that is statistical sampling, meaning then statistical sampling more scientific, and also the advantages of the statistical sampling. Are you understanding? Then it says under now this next 2 points over here, these are not in the advantages. Advantages khatam. Advantages are over. Now these are some additional points. Okay, in statistical sampling, always appropriate, because you are praising it so much. It is calculated, then sample size does not increase, minimum sample size. Is it always good to go for statistical sampling only? No, it says sometimes statistical sampling may not be appropriate. So auditor should not attempt to use statistical sampling when another approach. So which is the another approach? Non-statistical sampling can be done with less time and less effort. Right? For example, when you have to check legal requirement. Now, whichever law you want to check the legal requirement, select those sample, non-statistical method. There don't unnecessarily apply statistical sampling. Are you understanding that? Audit staff has no knowledge about sampling technique. In such circumstances, again, statistical sampling becomes complex and inappropriate. Right, so one, what does it say when you want to check the legal requirement of your or your staff doesn't know how to do the statistical sampling? Then in that case, what you should go for? You should go for the non-statistical sampling. Okay, so it's not that statistical sampling is always appropriate. Sometimes statistical sampling also may not be appropriate. When is it not appropriate? When you want to check for legal requirement, which should be checked on the basis of the checking it non-statistical could be taking less time and less effort. And when the staff who has to do the sampling doesn't know the method, right, does not know how to use the statistical sampling, it might become complex and inappropriate. Okay, right. Then what is non-statistical sampling? It says which does not have the above features. What are the above features? Random selection of the sampling units, then the use of probability theory to evaluate sample results, including the measurement of the sampling risk characteristics. If these features are not there, then what is good? Then what is good? The non-statistical sampling. So if it does not have these features, then it is the non-statistical sampling. It is based on the personal experience and knowledge. Obviously, it is used many years because of its simplicity in the operation. Right? Again, what does it say? An attempt should be made to avoid establishing a pattern. Like, otherwise client know, okay, oh, 2024 when auditor came, he checked June transaction. 2025 when he came, he checked July transaction. Now 2026 client can guess, okay, auditor will check August. So then they will say August ekdam clean, and August absolutely fine. Rest 11 months we can do whatever window dressing we want to. So auditor, it says you do non-statistical sampling, but avoid establishing a pattern. Like, the client should think you never know what sample, which month this auditor may check. You can't guess, that type. You understand? So avoid establishing a pattern, right? Again, what does it say? You check more of the samples which are towards the end of the year. Why? In order to check for the cutoff. Did we discuss cutoff yesterday? Segregation of transaction from one accounting period to another, and there is high risk of the misappropriation. However, what is the problem with non-statistical sampling? Can you take the blow of the AC up? Vent. You can put it up. Right? Non-statistical sampling, it is criticized on the grounds. No. No, you can just take it up. Yeah. Right. Non-statistical sampling, it is criticized on the ground of neither being objective or scientific, right? So that's the disadvantage of the non-statistical sampling. Okay. Right. So then, now finally, after discussing the statistical, non-statistical, is it like, you should go for statistical or should you go for non-statistical sampling? Is it any preference you should give over there? It says nothing. It is the professional judgment of the auditor. What is more important? Okay, whether I do statistical or non-statistical, that is not important. What is more important is that the sample must be representative. How I select the sample, that is not important. What is more important, that whatever sample I select, by whichever method, it should be representative. That is, it should be closely similar, if not exactly same to the entire population. Closely similar to the whole population, though not necessarily exactly the same. Sample must be large enough to provide statistically meaningful result. This is favorite one for correct and incorrect. You have to learn this only. Right, whatever be the approach, statistical or non-statistical, what is more important is that the sample must be representative. It should be closely similar, if not exactly the same. Are you getting that? And also sample must be large enough. If you say no, take only 0.5 ml of my blood, then you say 0.5 ml, what to check? So it must be large enough to provide the statistically meaningful result. Right, to provide the statistically meaningful result. Are you understanding that? What did we discuss? Approaches to sampling. What are the two approaches? Right, statistical and the non-statistical sampling. Then you have some other topics over there. Okay, sampling versus traditional method of auditing. Traditional is what? 100% checking. Then what auditor realized? You get the same satisfaction even by checking a part of the entry. What satisfaction you get by checking all the entry? What satisfaction I get by checking? So all the entries, same satisfaction I can get even by checking a part of the entry. So again, what does it say? They can derive the good satisfaction by checking lesser number of the transactions if they check the sample on a random basis. Right? So that is why they decided to check only a part of the whole mass of the transaction. And sampling is used for the test of control also. And then the process of estimation. Right? Another truth about sampling technique, it can never bring complete reliability. So based on sample, can you completely rely on the result? No, it cannot give the complete reliability. And again, what does it say? When nowadays, when the auditor started doing part checking, so this part checking was the origin of the statistical theory of sampling. So when I do part checking, that is not statistical sampling. For statistical sampling, what are the three rules? Random selection, use of probability theory, including the measurement of the sampling risk characteristic. So instead of 100, I check any 10. It says that is not statistical sampling, that is part checking. But then where did statistical sampling come from? It came from the origin of the part checking. Are you understanding that? And then auditor can decide whether to use the statistical or the non-statistical sample. Okay. Extent of checking on a sample plan. What is extent of checking? The number of the samples. Right, so number of samples to be selected depends upon the size of the organization. The bigger the company, the more the sample. Depends on the internal control. The more effective the controls, the less would be the checking. Depends on the reliability of the records. The more reliable the records, the more would be the more reliable the records, the less would be the checking. The more reliable the records, the less would be the checking. Then depends on the tolerable error range. Auditor can tolerate more error. Right, now let us make this table over here. Right, if tolerable level of the auditor is more and a tolerance of the auditor is more, sample size will be more or less. Right, I can tolerate more errors, so obviously sample size will be less. Expected error rate is high. Expected error rate is high. Sample size will be more or less. Now sample size will be more. I'm expecting more errors, so I will do more checking. I can tolerate more errors, so I will do less checking. Are you understanding that? Risk is high. Obviously, auditor will do more checking. Risk is high. Auditor will do more checking. Are you understanding that? So tolerance is high, less checking. Expecting more errors, more checking, and risk is high, risk of material misstatement, obviously the auditor will do more checking, right? More number of samples would be checked by the auditor. And then we have the stratification. You know what is stratification? The process of dividing the population into the subpopulation, right? It could be done on monetary value, like I did less than 1 lakh, 1 lakh to 10 lakh, more than 10 lakh, or I could have also divided as at like north, south, east, west. You know, any, you can use any basis for doing the, like North India sale, South India sales, East India, West India sale. Even that can be, is that also a method by which you can do stratification? Yes, right. And then stratification means you're dividing the heterogeneous population into the homogeneous population, because now what I'm doing over there, right, homogeneous population I'm dividing into, heterogeneous population I'm dividing into the homogeneous population, that all above 10 lakh coming together, 1 lakh to 10 lakh coming together, right? So heterogeneous converted into the homogeneous population. And then you also have this value weighted selection, right? There you also have this concept of the value weighted selection. Okay, right. So what is this concept of this value weighted selection that they talk about over here? Right, just quickly have a look at this example. Again, I'm going to explain it only once, so understand it properly. Okay, say a weight. Now, how to determine the weight? That is not a part of our discussion. But by analyzing, now these what amounts I have written over there, these are voucher amount, 48,000, 23,000, 5,000, 9,000. These are like say some expense voucher amount. For these vouchers, the auditor has determined a weight. Okay, general weight is something like materiality, but it is not materiality. On an average, what is a important or an average balance of these accounts is like say 1 lakh of all these expenses. Now auditor, what he starts doing, he starts taking the cumulative totals of the voucher amount. Now auditor, what he starts doing is he starts taking the cumulative totals of the voucher amount, like say 48,000 plus 23,000, 71,000, 71 plus 5, 76, 76 plus 9, 85, 85 plus 12, 97, 97 plus 35, 1 lakh 32. Has it exceeded 1 lakh? Yes, then sample voucher number 6 is the sample. Right, then after that again start from 0, again start from 0 means 6,000, 6,000 plus 4,000, 10, 10 plus 2, 12 5, 12 5 plus 23, 35 5, 46, 81 5, 59, 140, 500. Has it exceeded 1 lakh? Yes. So again voucher number 12 is the sample. Again start from 0. Again take the cumulative total. Wherever it exceeds 1 lakh, that is the sample. Right. So what is the benefit of this method? Entire populations gets covered, and there is a higher possibility that high value items will be selected. Why? Because generally when I add a high value amount, it exceeds the weight, and that is why generally that would be selected. Not that always it will be selected, but there is a higher chance that the high value items will get selected. Right. So this is value weighted selection, which in the big fours they also call it as the CMA. What is CMA? It is the cumulative monetary amount sampling. Cumulative monetary amount sampling. You know, cumulative monetary amount, because I'm taking the cumulative totals of the voucher amount and I decide a weight, and wherever it exceeds that weight, sample. Again start with 0. Again where it exceeds the weight, sample. Right, so that's the value weighted selection, right? So it says sample size, selection and evaluation will result in conclusion in the monetary amount. So when performing test of detail, it may be efficient to identify the sampling unit as the individual monetary unit. So first you identify sampling unit. What is sample unit? Subdivided population. Each of the subdivided population is called as a sampling unit. Then what does it say? Having selected specific monetary unit, like in my example, what did I take? 1 lakh. What was the sample monetary unit that I decided in my Excel file over there? 1 lakh. What does it say? For the accounts receivable, the auditor may examine the particular items, for example, individual balances that contain that monetary amount. So whichever balance had that, wherever the total exceeded 1 lakh, I selected it as a sample. Right, so I decide a monetary amount, and whichever sample has that amount, I select it as a sample, whichever balance has that amount. One benefit of this approach is that audit effort is directed towards the Large value item because there are greater chance of they getting selected. I told you now, higher chances of the high value items getting selected. And this approach may be used in conjunction with the systematic method and is most efficient when using selecting items using the random selection. So it says it can be used along with the systematic method, right? So we'll very soon see the systematic method also. Right, so at least did you get a rough idea of what is value weighted selection, everyone? Right, value weighted selection. Okay, right, then again this is a favorite question: samples design, sample size, and selecting items for the testing. What are the three words over there? Sample design, sample size, and the selection of the items for the testing. So sample design, that is how I should do the sampling. For that, what should be very clear to the auditor? The purpose of the audit procedure and the characteristics of the population. Okay, what I want, you say I want to check depreciation, I want to check the debtor, I want to check the revenue. So the purpose of your audit procedure should be clear, and also the characteristics of the population. Do you know the characteristics of the population? ACR, appropriateness, completeness, and the reliable. Okay, so one, while determining the, when you want to do sample, first you have to decide the sample design. So how to determine the sample design? It says it depends upon the audit procedure, that is the objective to be achieved, and also the characteristics of the population. Right, then once you decide ki, okay, I want to check the debtor, and for the debtor this is the population I would require, and then these are the audit procedures which I want to perform on the debtor. Next, now what I need to decide is the sample size. Next, now what I need to decide is the sample size. Sample size means what? I need to decide upon the number of the samples to be checked. So now the auditor shall determine a sample size sufficient to reduce sampling risk. You know what is sampling risk? The risk that the sample may not represent the population. So now, say example, just like I taught you reasonable assurance and audit risk. Did I teach you reasonable assurance and audit risk? Similarly, there is a concept like, when I'm doing sampling, should I consider sampling risk? When I'm doing sampling, should I consider sampling risk? Right. So say professional judgment of the auditor. He says 3%, the sample may not represent the population. 3% is the risk that this sample may not represent the population. So what is this? This is the sampling risk. Means on the other hand, what am I also saying? That 97% this sample will represent the population. That it's not there in your syllabus, but that is called as the confidence level. That is called as the confidence level. Okay, if I say 3%, it may not represent the population. That means 97% you think it is going to represent the population. So how to mitigate sampling risk? Increase sample size. That's the only way to mitigate or to respond to sampling risk. So say originally I was going to check 10 samples. Instead of 10, now out of 100 I will check 12. Right? So you can't say, though, no ma'am, still there will be sampling risk. If you say like that, then 530 is over. If you say, no ma'am, there is sampling risk, so I should check all 100, so then sit and check 100. Then there is no discussion of 530 left only. You understand? Yeah, but when I selected 10 sample, I found out a risk. This 10 may not be representative of the population. That is why what I did, I increased the sample size, say, to 12. Right? So what does it say? You have to determine sample size to reduce sampling risk. Right? So determine sample size to reduce the sampling risk. Right? To reduce the sampling risk. So what are these points over there? Sample design, then sample risk. So now why I am checking? So you say I want to perform the procedures on debtor and I check the population. Then how much debtors I want to check? Say you say I want to check 20 debtors. Now will I have to select those 20 debtors? I say, come to know this is the population. This is what I want to check. Then how many debtors I want to check? Say I decided 20. That is my sample size. Now will I have to actually select those 20 debtors? Now how to select those 20 debtors? It says in such a manner that each item in the population has an equal chance of being selected. What we study in our random selection. Right, where each item in the population has an equal chance of being selected. So now selection of items, how it should be done? In such a manner that each item in the population has an equal chance of being selected. Right, so this is again a favorite question of ICAI. So students don't understand only what is this sample design, sample size, and selection of items. So this is what it means. Okay, sample design, why you want to select the sample, then how many samples you want to select, and how do you select those samples? You select them in such a manner that each item in the population has an equal chance of being selected. Are you understanding that, everyone? Okay, right. Then we have the discussion regarding factors influencing the sample size. Right, factors influencing the sample size, that means again it means the number of sample. Okay, right. So increase in the extent. So first they talk about the factors which influence sample size for TOC and then the TOD. Are you getting that? Again, these questions come in the MCQ. Right. So what is the first one over there? Increase in the extent to which auditor's risk assessment takes into account relevant control. So you want to consider more of control. Will you do more checking or less checking? Obviously, you'll have to do the more checking. Increase in the extent. When I read increase in the extent to which auditor's risk assessment takes into consideration control, it has to be increased sample size. Increase in the tolerable rate of deviation. Auditor can tolerate more error, then decrease sample size. Auditor is expecting more errors, then what you need to do? Increase sample size. Had we discussed this? Tolerate more error, then decrease sample size. Expecting more errors, then increase sample size. Are you all with me? Right. Then increase in the auditor's desired level of assurance. When I read this much only, I come to know increase. Auditor wants more assurance. What he'll have to do? More checking. Then increase in the number of sampling units. What does it mean? Increase in the number of sampling units. Like population is 100. I select 10 samples. Then instead of selecting the samples from the entire population, I divided into 1 lakh, 1 lakh, 10 lakh and 10 lakh. And then I selected 244. Or I divide the population into 4. And then I decided to check 3322. Right? So does it matter whether I have 3 sampling unit, 1 sampling unit or 4 sampling unit? How many samples I'm selecting is the 10 only. So what does it say? Increase in the number of sampling units will have a negligible effect. What is sampling unit? Subdivided population. So first I had only 1 sampling unit, then I had 3 sampling units. Everybody, you understand, no? Here I have 3 sampling units. Here I have 4 sampling units. But even from all of those also, how many samples I'm selecting? How much ever I want only. You understand, no? Whether I eat 1 food item or whether I eat 10 food items, I will eat only how much I'm hungry. You understand, no? Just because I'm eating 10 items, will I eat all 10 equivalent to what I'll eat for 1? No, now all that 10 put together also I'll eat. If I was only eating rice and now I'm eating say 10 items over there, right? Will I eat the same quantity which I need to eat? Yes. So doesn't matter that if eating 10 then I'll eat more. What does it say? It will have a negligible effect. Right? Do you understand this point, everyone? Right. So that is for TOC. Now same story for TOD. Increase in the auditor's assessment of RMM. If risk is more, checking would be more. Increase in the use of other substantive procedures directed at the same assertion. So same area I'm checking through 2-3 ways. So at one area the checking can be less. And I'm checking it while checking sales also, purchases also, inventory also. So at one place the checking can be less. Then increase in the auditor's desired level of assurance. Again, increase. Increase in tolerable misstatement. Decrease. Increase in the expected rate of misstatement. Then increase. Sorry. Right? Expecting more errors than increase. Right? Stratification of the population. So stratification means what? Now each of the subdivided population, am I going to select 10, 10, 10? Each I divided the population into 3. So from each of them, am I now going to select 10, 10, 10? No. How much I'm going to select? 2, 4, 4. So stratification, what does it say? Decrease. And number of sampling units, that has a negligible effect. Right? Number of sampling units, that has a negligible effect. Is everybody able to understand that? Recently, they are asking lot of questions on this one. Increase, decrease. Right? Sample size for TOC and TO. D. Right. Then after that you have the sample selection methods. What are the methods? Random, systematic, monetary unit, haphazard and the block selection. Random selection. Each item in the population has an equal chance of being selected, in which you have 2 random samplings. One is the simple random sampling and second one is the stratified random sampling. And a simple random is what? Right, from entire population you select the 10 samples. And stratified random, you subdivide the population and then you select the samples on a random basis, wherein each item in the population has an equal chance of being selected. Okay, generally for homogeneous population we'll go for simple random, whereas for heterogeneous we'll first convert it into homogeneous by doing the stratification and then select the sample. If the total sales of the company are in the range of 1000 to 1200, all the sale invoices of the company are in the range of 1000 to 1200, all the bills of the company, I will prefer the simple random for sample selection of the sale. But if the sales of the company are in the range of, they sell a 10 rupee product also up to a product of 2 lakh rupees also, then I will go for the stratified random sampling. If you go to Sarvana store, even a 10 rupee product you get over there, and even a 2 lakh rupee product you get over there, right? So then for selecting samples over there, you will do the stratified random sampling. Are you understanding that? So simple random and the stratified random sampling. Then you have the interval sampling. What is interval sampling? First sample having a random start, say 40, and a voucher number 40, and thereafter that applying a constant interval. So first having a random start and thereafter applying a constant interval between the selection. Say apply an interval of 100. So 40, 140, 240, 340, 440 sample. Are you understanding? First voucher having a random, just you pick up any, and thereafter you apply a constant interval between the selection, right? So that is the systematic sampling or the interval sampling. Are you understanding that? Monetary unit sampling is nothing but the value weighted selection. Did I discuss with you CMA? The cumulative monetary amount sampling, right? Then you have the haphazard selection. What is this technique of selecting sample? It is no technique without following a structured technique. And randomly you go to the client vouchers books where they are kept and you pick up a few samples from there, right? Randomly. So obviously I'm using the word randomly, so obviously there is a question which should be there in your mind. Okay, then what is the difference between the random selection and the haphazard selection? Okay, in haphazard there is always the possibility of bias. I may always say, oh, this is a very thick voucher, I don't want to check it. Or this is a very old voucher, I want to check it. There could be an intention to include or exclude a specific unit in haphazard selection. But if in haphazard there is no bias, but if in haphazard sampling there is no bias, then it is as good as random selection. Then it is as good as the random selection. What is the only difference between haphazard and random? Random, there is no bias. Whereas haphazard, there could be a bias. There could be an intention to include or exclude a specific unit. And what is the other difference? Random selection is a statistical sampling method, whereas haphazard selection is a non-statistical method. In random, there cannot be a bias, but in haphazard, there could always be a bias. But if there is no bias in haphazard, then it is as good as random selection. What does it say? Haphazard is not appropriate when using the statistical sampling. Right. And block selection. What is block selection? Say total vouchers of the company are 1 to 1000. Total 1000 expense vouchers in the company. I select sample 251 to 300 straight in a serial line. Serial number 251, 252, 253, 254, 255 right up to 300. So what I do, I select a block of continuous items, contiguous items, consecutive items, one after the other. That is the block selection. And a selection of a block of contiguous items from within the population. And a contiguous. What is contiguous? Continuous, consecutive items from within the population. Again, what does it say? Ordinarily, this method should not be used. Because, if I check vouchers from 251 to 300, say all these might be in the month of June. I'm just giving an example. They will be similar period only. And obviously, say one employee would have only processed these transactions. So I'm not covering the entire period. I'm not covering the transactions which might have been passed by different employee. Say, till September he worked in the company. Then October some new employee joined the company. So I won't cover the work done by the new employee. Right? So it says block selection ordinarily should not be used because items in a sequence are expected to have the similar characteristics. Items in a sequence are expected to have the similar characteristics. Are you understanding that? Okay, right. So these are the 5 methods for the selection of the sample. What are the 5 methods? Random selection, systematic sampling or the interval sampling, and the monetary unit sampling, haphazard selection, and the block selection. Okay, now I selected out of 110 samples, and now in these 10 samples, what happened? I told client give me the evidence. Client say one out of them voucher is not available. So 9 they say CA voucher is available, one not available, missing voucher. So for that I might find a replacement item, right? So one, I want to check each item selected. If I could not apply the procedure, then I need to select a replacement item. So I'll tell client, okay client, I'll give you another voucher, and I'll tell you another voucher number. So replacement item. And now I select samples for TOC as well as I select samples for TOD. For TOC, if I find out anything wrong in the sample, then that I come to know is a deviation. And for TOD, I come to know anything wrong in the from the sample, then that I call it as a misstatement. Are you getting deviation and the misstatement? Are you able to follow? TOC, I want to check whether controls are operating effectively, and I found no, they are not operating effectively. So that's a deviation. And then for test of detail, I found out a fraud, I found out an error. So that is nothing but a misstatement. Okay. Then what I need to do for that deviation or misstatement, I need to check is there any common feature. Okay, generally I see in cash sale it is happening, but credit sale it is not happening. Or it is happening in the Mumbai. All the samples of Mumbai branch problem is coming. Chennai branch problem is not coming. Or it is happening only in the electronic segment. It is not happening in the, say, some retail segment of the company, other segment of the company. So now, one, you check the items. If you can't check, you check for a replacement item. Then you check for the, right, you check for any, find out any misstatement or any deviation. Then for that misstatement or deviation, you try to find out is there any common feature, that is it related to a particular line item or a particular location or a particular type of transaction. Then after that you check is it indicative of the fraud. Then you also investigate the nature and cause of the deviations or the misstatement. Right, the nature, okay, why this deviation or misstatement has occurred. Do you understand this? Sometimes you can't believe it is so technical, but you can understand. You understand the nature and cause of the misstatement or the deviation. Okay. Then what has happened during the year? Say the company always had only Indian currency transaction, but only one foreign debtor they had during the year. So for foreign debtor, they never had any control, because company never had only any person coming and saying that, oh, I want to pay the fee in dollar, I want to pay the fees in euro. Never happened only. It happened for the first time, and for that the company did not have a control. That is why what we said, it was a there was a deviation or there was a misstatement. There was a deviation or a misstatement. Now generally what we do when we come across a deviation or a misstatement in the sample, we project it to the entire population. When we find out a deviation or a misstatement in the sample, we project it to the population. Okay, if in 10 there are 3, in 100 there would be how many? And generally we do that. But it says this deviation or misstatement which you've identified, please check if it is an anomaly. What is an anomaly? It is an exception. You won't find such transactions anywhere else in the population. Like this foreign currency sale, foreign currency debtor, it says there are no such transactions which have been entered into. So this deviation misstatement, should you project it to the entire population? No, you should not project it to the entire population. What it is an anomalous misstatement. It is an exception. You won't find any of these type more. Right, so first you have to check whether it is an anomaly, right? So anomaly may be a misstatement or a deviation. That is also a misstatement or a deviation, but it is not demonstrably not representative of the misstatement or deviation in the population. It does not represent the, it will not represent the misstatement in the misstatement or deviation in the population. So again, one, what you need to do, client is telling, array auditor, no such cases are there. This is only one case. That is what is an anomaly. No, so in extremely rare circumstances, when you discovered a sample which is an anomaly, you have to get a high degree of certainty that such misstatement or deviation is not representative of the population. And how you can get that degree of certainty? By performing the additional audit procedure to obtain evidence that the misstatement does not affect the remainder of the population. And okay, you won't find, it is only one of its kind. Like this, nothing variety is there in the entire population. So now, what does that mean? Whatever misstatement I have identified, it could be an anomalous misstatement or it could be the non-anomalous misstatement. Are you understanding that? Now, in anomalous or non-anomalous. Now, what does it say? Now, in non-anomalous misstatement, could these type of misstatements be there in the entire population also? Yes. So now, will I project the non-anomalous misstatement? Yes, you do the projection of the non-anomalous misstatement. To those non-anomalous misstatement, will I add this one anomalous misstatement? Yes. So what is the best estimate of the misstatement in the population? Non-anomalous misstatement, anomalous misstatement plus the projection of the non-anomalous misstatement is the best estimate of the misstatement in the population, because I will do the projection only of the non-anomalous misstatement. But will I also add that one? I had kept it aside. When I was projecting, I did not take it. But later on, will I add it to the best estimate of the misstatement in the population? Yes. So now what does it say? If it is a misstatement, if it is an anomaly, it should be excluded when projecting the misstatement. Then you do the projection only for the non-anomalous misstatement, right? The anomaly you exclude it while projecting the misstatement. You do the projection only for the non-anomalous misstatement. But now when you're trying to find out the best estimate of the misstatement in the population, what you need to do? Projected misstatement plus the non-anomalous misstatement. Projected misstatement, it's not very difficult, I've written it over here. Projected misstatement plus the non-anomalous misstatement is the best estimate of the misstatement in the population. And so when the projected misstatement plus the anomalous misstatement exceeds the tolerable misstatement, then you may conclude that it is a material misstatement, or you may conclude that it's an unacceptable sampling risk. Or if it exceeds the tolerable misstatement, you can check whether any other audit procedures can be reduced by obtaining the additional audit evidence. But at least did you get the concept of this anomaly? And then you don't need to project the anomaly, you need to only project the non-anomalous misstatement. To that you need to add the anomaly, and that will be the best estimate of the misstatement in the population. Are you understanding? These three headings over there are talking about that only, right? Nature and cause of deviation. So starting with selecting the item, replacement item, then you come across a deviation or a misstatement. You need to check the common feature. Is there a possibility of the fraud? And then you need to investigate. And then in investigate, first you need to check whether it is an anomaly. If it is anomaly, you have to check that it is an anomaly with high degree of uncertainty, a high degree of certainty. Okay, there are not similar ones in the remainder of the population. And then you do the projection and then the evaluating the results of the audit sampling. Right, so is it a brief understanding for you regarding the chapter of the audit sampling, everyone? Right, so what chapters have we discussed? Basic concepts in auditing. Then after that we looked into the analytical procedures and the audit sampling. Right, so after the break now we will study the audit of the items of the financial statement, and then later on we'll look into the government audit and also the automated environment. Okay. Huh? Yeah. What